Okay, Ray Bowles is my good friend of mine. He's a fellow trader. Okay,
Mm.
this type of thing, all this type of thing, I don't need to go through all disclaimer everything lah.
Yep,
Okay.
yep.
Now this I don't need to go. This one my picture of one of my traders conference which I do back in 2014. Trading is just a tool
Mm,
to able to
mm,
live the life you want to live now. That's my philosophy.
mm-hmm.
So it's
Yep.
not that trading is end all. Methodology strategies are just tools to me. Okay, so whether
Mm,
I trade shares or futures or options, to me I do it interchangeably. Okay.
mm,
For those, I think you saw my background before, correct? So I don't want to spend too much time for it. Okay.
mm,
I've been doing this helping my fellow traders since 2002. So let me share. In today's market now, there is beside the bull and the bear, there is what I call the kangaroo market. The today's market
mm,
is a lot of abnormalities going on in the market. Like yesterday night, I
mm,
had a company called GME. The company went crazy, Okay,
mm,
from $90, from $80, shoot up to $250, after market. Okay,
mm,
so this is like abnormal. Okay, so now because the abnormal, what's it called, abnormal market or the new market efficiency, thanks to the fully electronic and maybe thanks to the coronavirus, everybody stay at home. There is a new market segmentation called kangaroo. This one is
mm,
from CNBC. Said the new market kangaroo. I have to agree with them. The market
mm,
volatility is yo-yoing between, like, I was seeing one, this post market, between $90 to $250 in post
mm.
market, pre market, which is a bit crazy lah. Okay,
Yeah, yeah.
so now stocks, I don't need to explain to you. You understand stocks very by heart. Okay,
Mm,
CFDs, I think you also understand CFDs. So CFDs is basically a private derivative instrument. Like you
mm,
trade on stocks and equities that in a normal market, the Singapore stock market and Hong Kong stock market, Malaysia market, you cannot short the shares directly.
mm,
So most of the time
mm,
you use CFDs. But CFDs
mm,
got good thing is got high leverage, 5, 10, 20 times leverage, depends what you're trading on. The bad thing
mm,
is what you're trading with a private broker. So
mm,
your trades is not your so-called transaction is not regulated by an independent licensed third party.
mm,
Okay. So what's
mm,
options? Options is like CFDs is a financial instrument, also a derivative. The difference between options and CFDs is this: the options are referring now to is what we call referring to US exchange traded options. Means that the options we are buying and selling now is traded to New York Stock Exchange, Chicago Mercantile Exchange, and to all the various US exchange. So
mm,
the option to trade now is exchange traded, which is totally different from a private derivative. So the price you
mm,
buy and sell for a particular option for a particular strike price for a particular expiry is referring to a is exchange traded, means that whole world see the same price. Okay,
mm,
so option
mm,
itself got two types. One type is called call, one is the call, one type is called put. To explain to you what the call
mm,
option is, I think you buy property before, correct? So when you buy a
mm, yeah.
property, you don't pay cash in full to them, correct? What you do,
Mm,
most probably you go and buy what you call buy an option to buy the house, buy the condo.
mm,
So most likely
yep.
say I like a condo. A condo is $5 million. Okay,
Mm,
uh, okay, I like to buy a house, but for 100 days, I like to buy an option to buy a house or your condo for $5 million for the next
mm,
100 days, for which I give you one
mm,
percent of the 1% of $5 million.
mm,
That is what I call a call options. This call
yep.
option, the letter to buy, let you to buy the condo at a stated price of $5 million within a period of 100 days.
Mm, yep.
So if suddenly the condo suddenly the next suddenly discover Warren Buffett buy the go and rent the condo opposite your this new condo of yours, automatically your condo price increase. Correct.
Mm,
So
yep.
this one
Yep.
is in old fashioned terms, how to say, in the old terms, it's what I call flipping the properties. Put a small deposit money, let you flip the properties. So same principle. You don't need to spend $5 million to buy the condo to control the control. You just simply buy the options to buy the house, to buy the condo at five
Mm,
million dollars within 100 days.
mm,
Understand so far?
mm, yep.
So options
Mm,
got call and puts. The one referring is a call. The other one is called the put.
Mm.
When you buy a put options, it's like something like you buying a car insurance like that lah. I buy a car, the insurance is
Mm.
$100,000. If anything happen to the car drop below $100,000, or the car damage beyond damage, then the insurance company must make good the repairs, etc., etc.
Mm.
Any questions so far?
Okay, I understand the concept. Yeah.
So any question, please ask. Okay.
Mm.
So CFD so much. Couple of things about this one first.
Okay,
Cost.
sorry,
Yeah,
sorry. Actually, I do have a question.
yeah,
So you can buy and sell a call, you can buy and sell a put, right?
yes. One thing
Okay.
good about US market, you can be the unlike casino. Casino you only can take the bets. You only can place the bets. But US market permit you to sell option that you as long as backed by cash, you can sell a nickel call, nickel put. So in a way, it
Naked call.
means that when you buy a call, that is what I call buy. When you sell a call, there is not no, there is not hedged by shares or other things. It's called naked.
Mm.
So when you okay, so in the way of trading, US market let you play options like you go casino like that. Casino you can buy a bet or you can take a bet. So in a way you can say US market let you become a dealer.
Okay, so when you say you mention naked, are you talking about just one, basically one position? You're taking just one position.
Naked is a terminology to explain the options, a option that is sold that is not backed by any physical underlying beside cash.
Mm.
So example now,
So you're taking a short position now.
yes, you can take a
Okay.
sharp position on the call or sharp position on the put, no difference. Example, you ever hear word
Okay.
cover call, right? You buy the shares, you sell options, right? That is
Mm.
considered covered because you have the mother shares to so-called back your call, the call you sold.
Okay. Okay.
If you sell
Yep.
a
Yep.
call that is backed by cash only, the technical term is called naked.
Okay. Okay.
To
All
me,
right.
there's no
So you're
difference.
basically, yeah, that means you're shorting something that you don't have, lah.
They don't have the physical unset but in the market
Mm.
one thing good about US market what I call no money no talk. So basically if you
Mm.
can sell something you must have enough
Mm.
cash assets to hold that position.
Okay.
Okay, understand so far? mm,
Yep.
Good.
Yep.
So this one I don't know about this is something new. A big 6 months ago, okay, the cost of trading US shares with US broker I say US broker means that US so-called MS bro is free. I repeat, you can buy 1,000 shares of Amazon and it's free.
Mm-hmm.
When
So
you
how do you define US brokers from our point of view? Say we are in Singapore, then are we talking about interactive brokers?
yes, the only two
Or,
licensed brokers at Singapore recently interactive broker got licensed about 6 months ago, or TD and Ameritrade. Both of them let you trade free.
okay.
But if you
So
trade
no commercial, nothing,
no
spreads, all
commissions,
this, nothing.
no sense, no spam. The price you see,
Mm.
one thing about US shares is exchange traded. So the price you see down there, okay, one thing about US market, US broker, they are not allowed to be market makers.
Mm.
They have to, once the order come in, the brokers must send out to third party.
Mm.
Okay, unlike Singapore
Mm.
brokers or like Singapore brokers or CFD brokers, they are market makers. Like Singapore, I think
Mm.
Singapore shares also say a minimum US shares are minimum $10 or 0.8% or 0.5% of share value. Then if you trade CFDs they got what you call extra fees or so-called holding fees overnight fees rollover fees whatever it is.
Yep.
Then
Yeah.
okay, so far one thing good about trade US shares is one thing good lah. It's free lah. The problem with US
Mm.
shares is this. It's downright dangerous. If you're not competent, if not skillful, if not seasoned trader to trade a shares
Mm.
just imagine you can short a company for $80 overnight you can lose $160. I
Mm.
got one company called G and Germany, Malaysia, England
Mm.
literally exploded in value from $80 $90 yesterday night market open After post market shoot up to $255. Then later
mm,
increase to $200. Just imagine you shot at $80. And now,
mm,
and the fact of this company is what? 1 week ago, it was trading below 40.
mm. Yeah,
Okay. Anyway,
yeah.
so what you will trade with local brokers, 10% US minimum or percentage of value, whichever is higher, plus all the extra fees chargeable. Especially you trade more with
Mm,
CFDs. Then we
mm,
got US options exchange traded with US brokers, 65% or cheaper per contract.
mm,
To be fair to each other, the 65 cents is not commission to the broker. The 65%, 65%, 65 cent shares are 65 cent shares are it's preferring not it's not preferring times 100 65 cents per contract options. Each option is
mm,
100 units or 100 shares.
mm. So per contract is per hundred shares
Yes,
lah,
for
basically, and it's
indexes,
standardized.
standardized for indexes, yes. For futures market, different ball game. But let's focus on equity market,
Mm,
easier to handle. Any
okay.
questions about cost of trading?
No.
So most of the time in world of trading, you are bullish or bearish. When you trade shares or trade CFDs or trade futures, you either trade bull market or bear market, either based on
Mm,
technical or fundamentals or price action. You're taking a position is
mm,
going up or going down. Options,
yep.
no. Options is multi-dimensionality. That means what
Okay.
I can structure a trade that I can do such a way that I can be bullish and bearish concurrently at the same time. Because when you trade shares, when you trade shares, you either trade either up or down only. You can't trade left and you cannot you you cannot trade shares. You only can trade bullish or bearish. You cannot trade both. Let me show you later on some
Mm,
examples how to trade what you call multi-directionality. Okay, normal market.
mm-hmm. Okay.
So normal
Okay.
normal traders for share investing okay, normal share trading investing most of the time is either up or down bullish or bearish
Mm, mm,
But in terms of trading using derivative market using options, you can see my screen now. It's 6 dimension.
yeah.
Bullish, bearish, sideways is considered normal, correct? Then we got extreme, ultra up, extreme, ultra down. Breakup, we call bull bear breakup trading. The thing can shoot up or shoot down. We can take a position that we can do what we call breakup trading or breakup trading concurrently. Means that if the thing shoot up, if the thing go up by $50, we make money. Drop by $40, we make money. Don't move, we lose money. They got strategies. We can use that
Mm,
with options. Then extreme
mm.
up. Then another one is called options premium volatility. This is the this one I think I need to spend more time explaining to you. See, when you do technical trading, you basically on chart pattern trading or indicator trading or your price action trading.
Uh, wow.
How you trade?
So I look at trends. I look at trends first. So I look at different time frames. Look at trends in terms of how should I put it? So let's say, for example, I look at the ABC wave. So I look at waves. Look at trends,
Okay,
and then from the trends, I will go down to entry exit levels lah. So then I look at candlesticks specifically and say, okay, where's the breakout? Where I put my stop loss and things like that.
okay, fine. That means by nature you're telling me you're technical analysis trader. You analyze maybe the last 30 days, 60 days, or last 6 months
Yeah, yeah,
directional trend or price
yeah.
action value, whatever. Okay, don't mind.
Something like that. So I tend to start with, say, weekly charts, and then from the weekly charts, I will drill down to daily charts, and then maybe two 40-minute charts.
Okay, that means most of our trade
Yeah,
are by nature what we call swing trading by nature. Can I say
yeah,
that?
something like that. Yeah,
Okay, in my world of trading, swing trading is how many days? 1 month, two
two
months?
weeks, usually 2 to 3 weeks. Usually, I try to keep to that. Not
Okay,
too
good,
long, not too short as well.
good,
Yeah.
good, good. In today's market, keep to intramonth. Thank you very much. Okay, in my world
Okay.
of trading, I got intra hour, intra day, intra week, intra fortnight, intra month, intra quarterly. That show how defined I am in trading. Because if you're going to do
Mm,
a 14 days trade and do
mm,
16 days, 16 weeks trade the parameters and take profit numbers all are different. Do we agree or not?
Yeah, well, I haven't traded so long before, lah.
Yeah, but as a trader, we need to
Not
trade.
that
You,
long.
you
Yeah.
must be able to trade multiple time frames, because the
Okay.
market suitability, we must respect the market. Okay, now,
Mm.
anyway, so now before we go further, I need to define open risk, fixed risk, because a lot of you all have this mindset. I don't trade shares and CFDs only. Unfortunately, that is open risk trading, which is like I told the young lady just now. She was doing a trade that do a trade that make $200-300 in profit. That he need to put in 5,000, 6,000, $8,000 to make the $300. That to me is open risk trading. So what's open risk trading?
Mm.
Open trading is trading in full value of underlying shares of CFD positions. Correct me. Let's say now let's
Mm.
say we take Microsoft. Microsoft is $230 company around there now. So if you trade
Mm.
shares, you buy 100 shares is $23,000. If you buy 100 shares
Mm.
of CFD equivalent is $2,300. But end of the day, whether you trade
Mm.
CFD with 10 times leverage or 5 times leverage, the capital exposure and physical underlying is considered the share value of $23,000. Understand
Mm.
say so
Yeah.
far? So,
Yeah.
understand
Yeah.
this is what you are doing now, all open risk. Future trading also same
Mm.
thing. I trade crude oil at I need $6,000, $6,000 margin for 1,000 one contract of crude oil futures with
Yeah.
one thousand barrels is about $50,000. So I need about five
Mm.
thousand $6,000 margin requirement. That is
Yep.
margin.
Yep.
But the physical
Mm.
underlying value is $50,000 because crude oil is trading on
Mm.
50,000. Make it $50 per barrel now. Understand so far?
Mm.
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 Now, my let's miss. Okay, let me. Am I talking too fast, Miss?
No, no, no. I'm fine. I'm fine.
Okay,
I will
next.
stop you if I miss something.
Yeah, fixed risk trading is defined as trading a predetermined dollar value determined by you before you even look for a trade or look for a trade. Okay, if you want to make, I
Mm.
want to explain in layman term, in the way it's simple. When you trade, let's say you go and trade Apple now. Definitely, when you buy Apple shares, definitely you have to put a stop loss on there, correct?
Mm.
The stop loss can be time stop loss, time stop can be dollar value stop loss, correct? Or can be
Mm. Mm.
what you call price action stop loss or chart pattern stop loss. Means that well, if the pattern behave, you don't behave this way, I must get out. Okay. Ah.
Mm.
So
Mm.
this type of fixed switch trade means what? Every time before you open a trade, there is a predetermined dollar value determined by you before even you look for a trade.
So are you saying that? Sorry. So are you saying that your risk, your exposure will not be beyond whatever you have prefixed?
Yes,
So, is that an absolute sort of a risk management kind
yes.
of? So,
When
oh,
I
okay.
say look carefully, I should work with capital risk.
Mm.
That is okay. I should put out there no use of stop loss without use of stop loss margin or leverage or buying power effect. That means that if your budget is $1,000 per trade, is $1,000 per trade. Unless you
Mm.
become smart and lax, you anyhow do my things, break my rules, then okay lah. Then I don't say
Mm.
lah. But if
Mm.
follow my rules, follow my rules and best practice, then it's fixed
Mm.
risk. Five is five, a thousand, a thousand.
Mm. Mm.
Okay. Afterwards, I will show you.
Okay, so
Yes.
maybe let's say I'll give you an example. So I got, let's say, X amount capital, and at any point in time when I enter a trade, I will say, okay, I will not risk more than 2 to 3% of that capital.
Mm-hmm.
How would that translate to what you're saying about fixed risk?
Can I explain to you later, Ken? Let me show you a
Yeah, yeah, okay,
portfolio
okay,
sample
yeah.
here, be better.
Mm.
Let me show
Mm.
you what
Okay,
is.
okay.
I need to explain to you the big picture for them. Then we narrow down to the
Yeah.
operational issue.
Mm.
May I ask you,
Mm.
sir, what is your trading account size? Your trading account size now?
Say about 100.
Okay, trust me, sir. I tell you first, sir, you can do $500 or less. You can do a trade on Google. The target risk return is can be at least 50 to 100% return.
Mm.
Okay,
Mm.
I show later. I explain to you more detail. I will show some examples are better that way, because
Mm.
I like Ray Bawote said, we are practitioner traders. We are not professional trainers. Okay. By the way,
Mm.
I retired in 2002. I should know by now. I do this because I'm
Mm.
passionate. I get tired. I see my fellow traders are kind of slaughtered left, right, center without knowing why.
Okay.
At least you die, you know. At least you die, you know willingly. At least you know willingly knowing you're going to die, and you know why you're going to die.
Mm.
And least in Chinese say die
Mm.
you also don't know why you die. You already are walking zombie already also don't know die. So sorry. I heard you're a good master in trading. Now my CFD position margin call already. What can I do? Already dead already, my friend. You already
Mm,
got margin call
mm,
without how to save your position without incurring more capital exposure, more risk.
mm,
There's no way to save an account without substantially increasing capital exposure to save your trade. It means that you need money to save your money. Okay.
mm,
Anyway, so no
mm,
margin, no stop loss, no margin, no leverage, no stop loss. Here's an example here. Can you see? We're talking about Boeing now.
mm,
Now we want to do a bearish trade on Boeing. Okay. Okay. If we can short shares, not a problem. It'll cost you about $17,000 around there. CFDs cost you about 1.8k, 10 times leverage. Okay.
mm,
Okay. Now you can buy a bear put. Okay, a put is a bear. So you can buy a put. How much? How much? $15.35. That is $1,535. Or you can do a spread trade. Okay, buy a spread trade means that I kept my profit potential, but also kept my risk from $1,500 to kept to $210. These are edu trades which I
mm,
did, which I do to educate my students and my followers. You
mm,
see now, which one
mm.
better? You see now, if I pay a position for $210, what is the worst case can happen to me if the market don't screw you up or you screw yourself up? You understand what I'm saying so far? Any questions?
Mm, Bear option spread. What's that actually?
When you buy a put is buying a bear. When you buy
Mm-hmm.
a put options, it means you are bearish.
Yeah, you're shorting lah.
No, wait,
You're
wait.
basically
Shorting is
buying an
selling.
option. Mm.
Shorting, you are selling something. When you
Yeah.
a buy a put, you're buying a bearish position.
Yes.
That means what? If you go and buy a put at 170 put, means what? Okay, means that you have the right. Okay, you have the right to sell the shares at 170. That means what?
Yes.
You're hoping the thing drop to 100. Wow, my 170 put I could sell. I buy for $15. Now I can sell for $70.
Mm.
Okay.
Okay.
Okay, see here
Yeah.
I can buy a bear put, but then at $1,500 per option most people beginner level or starting up level retail level traders which have 5-10k account size cannot do $1,500 trade Do you think it's a good idea to put 15% of your account size into one trade? I think to me it's totally ridiculous And I say
Mm.
my
Mm.
job now is to maximize my people, my followers, students, what you call learning experience while minimize capital exposure. You notice that I never said maximize
Mm.
profit minimize capital exposure because the smaller the capital you have in the market, the less risk you're gonna have. Yes or no?
Mm-hmm.
So you got two choice: $17,000 for shares, or go and buy a bear position options for $1,500, or you go and buy a spread for 210.
Mm.
Depends on you. Okay, for you maybe you said $1,500 is quite justifiable. Okay, fine. Then the trade is okay. But for
Mm.
if you got 5k, 10k account size, do you think it's a good idea to put $1,500 into one trade? Correct.
Mm.
And my philosophy is simple: this to be good, you become a good thinking trader, you must do a portfolio. Means that you must do a basket of trades. Anyway, we'll check that.
Mm.
Understand the principle. By the way, these are edu trades inside. I bought it for 210, okay, and we close the position at 16. 2 days later, buy on 14, close on 16. We buy 210, we close it for 380.
Mm.
Look,
Sorry, so the bear option spread, how does it work?
mm, simple. When you buy a 170 put, that means what? You have
Mm-hmm.
the right to sell the shares at $170. Okay,
Correct.
up to the date of expiry, which happened to be 20th of March last year.
Okay.
Okay,
Yeah.
so basically, if Boeing drop to zero, your options technically and not technically and legally is worth $170.
Mm.
Okay.
Mm-hmm.
Okay, it's something like insurance like that lah. You buy insurance
Mm,
hoping that nothing bad happen to your car lah. But this form of insurance
mm,
policy means that if the market if buy Boeing at 170 I think drop down to 50 my option is entitled me to sell the shares at $170 when Boeing is trading at 150 at the open market. So the
mm,
technique, what you call the physical intrinsic value or the face value must be $20 because I
mm,
entitled to sell the share at 170. The person who sold me the options must take delivery the share at 170.
mm. Yeah,
Okay, for that you pay
yeah.
$15 to him. If not, why should I pay
Mm,
money to the guy?
mm, mm. Yeah, I understand.
So okay, now we're talking about fixed fee trading. We're talking about buying per se, because buying have the right, selling have the obligations. So for this case we're
Mm,
not talking about selling, we're talking about buying first.
mm.
Okay, any questions so far?
No.
Next example, Square. Square is also a bearish trade. It's trading about $240 at time selling. So instead of buying, instead of selling a share at $240 or $24,000 risk exposure, or using CFD 5 times leverage, I need 4,002. I can buy a bear position for $263. Okay,
Mm,
okay, that is good lah. Okay, next, either that I can buy a bear hedge spread for $90. So is
mm,
it 265 good for you or buy $90 good for you? Will depend on what. What is your budget per trade? Okay.
mm,
When for my students, all my students have what you call every trade going on. There's a budget ready. There's a portfolio. There is what you call a master plan. Okay, how much dollars and cents can I committed into one company or into one directional or into whatever it is. Okay,
mm.
my job is to prevent you to being blown up by the water.
Mm.
Okay,
Okay.
now so this trade is what? This is a trade out. This trade, the overnight trade. This trade was the edu trade also. We do this as an intra-week trade, just before Christmas, 24 Christmas Eve. My student received a nice bonus of $145 profit in 2 days, just before Christmas. Open on the
Mm,
22nd, take profit on the 23rd. Buy 90 cents or times $190. Sell for 235, and net profit is 145 or around 150% return on capital in 2 days. Any questions?
no.
Ah, So, so I think I need to must go find a bullish trade for you. Okay, it's the same principle around. Okay, this
Mm,
is a bullish trade now. This bullish trade is actually this one is actually option on index. This one S&P 500 index. Okay, so we can do a bullish trade using option. Yes, we can. Now, first thing first, we index is cash index, so we cannot buy an index directly or short index directly. Expect through S&P 500 futures. Okay, which is now
mm,
to short one S&P 500 futures or slash ES if 50 units will cost you about $11,000 margin now. Or two, you can use you can do CFDs you can do long position times 20 times leverage. It will cost you $16,700 in margin requirements.
mm,
Why? Because the underlying value is what? 3322.
mm,
Correct. So 3322 point that's why times 100 is 300 300 332,200. 20% divide by 20, $16,700.
mm.
Understand so
Yep.
far? Ah.
Mm,
Next, you can buy a bullish option, buy a call, cost you $96.
mm,
$96.50. So it's $9,650.
mm,
Which is in terms of this is what I call a debit trade. This is your capital exposure. No leverage, no buying
mm,
power effect, no margin or borrowing.
mm,
Or next, you say Thomas, $9,000 too much out of my budget. You can always go and buy a $10 spread that costs you $450.
mm.
Okay, this is a live trade, also done. Okay, so we got two choice: buy $10,000 worth of options or buy a spread. So a spread is an option means I buy one option, sell one options, but capping my risk to $450, but also minimizing my profitability. So if you're a firm believer that S&P 500 can go to 5,000 points, 10,000 points, spread trading is not a good idea. But for day-to-day trading, spread trading is a more, I would say, more risk efficient, more productive way of trading.
Mm.
Look at the returns.
But spread trading is good only for range or volatile markets.
Any market can do, my friend. I tell
Mm.
you, option is multi-dimensional trading. After, let me show you some examples, Ken. Would that be better for you to explain to you?
Mm. Mm. Okay, okay.
Okay. Now, so straight trade. So you got two choice: buy one straight, buy one a bull call for $9,650, or buy one spread for $450.
Mm.
Then I buy the trade on second of November last year. Hold it for 3 days, able to take profit at able to sell to close that trade for 960. Notice means I net a profit of $510 or 113% return on capital. Okay, so now the question is this: how often that a share trade can make 50% or 100% return in matter of days? You understand what I'm saying, Kefar? So
Mm.
options
Mm.
let us trade with what? Minimum capital exposure, maximum profitability based on return, based on percentage numbers.
Mm.
Okay, any questions so far?
Nope.
So I don't talk about you guys. This is one trade inside. Okay, you notice the title: Joy and Danger of US Trading. This company is crazy. Yesterday night, after market close, shoot up to $255. Okay,
Mm.
look at how much it make. Look, you see here lah. What is the return? Plus 5,233%. This guy is what I call jackpot trading. I hit a jackpot.
Mm.
You see you can see the PL, you can see the PL profit for the day lah. $247,000 after net the losses net the loss and capital now 194,000 profit. His capital is how much, his capital exposure $51,000.
Mm.
You understand say lah? Just imagine the power job, because I just telling you the joy and danger. Okay, it's up to you to do it's up to you decision. But as a good trader, if I could put for $51,000 inside and I could make $200,000 out of it okay lah, okay lah. Yeah.
Yeah.
Hey, to be fair, option trading 50%, 100% return is very common. I'm not joking. 50%, 100% return is very common.
But that means you can, if you have this kind of potential, but on the downside also equally, right?
No lah. Hello, my
No,
friend. Look at this trade here like that. What's my
no,
risk?
no. I understand this. Yeah.
For $50 only Thomas, what happen if your short position got assigned? Don't worry lah. I hedge for every short position I have. I must have a buy position.
Mm. You're talking about the spreads, right? The option spreads.
Yes. Okay, like this guy here, like that. Another hero guy here. This is I tell you, this one come from a source, I think, for one Robinhood trader. Look at the damn thing. He buy options. He buy option at 40 cents. He go and buy 1,000 contracts. He can make 13,000% return.
Mm.
He buy the shares. He buy the shares at 14.89. He make 300. So this guy, I have to compliment him. Is what I call a big time speculator, a jackpot trade. Why did he hit? He make a lot of money. Anyway, this is, I said, the joy of danger lah. If you are on the right side hallelujah lah. If the wrong side margin call,
Mm.
especially
Yep.
the CFDs.
Mm.
To me, simple. Okay, let me explain to you. All strategies are best strategies as long as you're a winning trader. Sorry, So for every trade, there must be a winner, there must be a loser. The winner receive the money, the loser give the money. Simple as that. So every trading strategies whether chart pattern based or technical analysis based or strategy based are definitely must be a winner lah. And let me show you okay. By the way, trading can be done easily. Example like this trade making money trading while on holidays, okay, using smartphone. Okay, I don't mind. This one was done the year before when during one of my last holidays was I was in Greece. You can see what timing now. Tesla, you know Tesla, correct?
Yeah, yeah.
I buy $2.75. I bought 2 contracts. The reason why I do this trade, but technically, factually, I'm not supposed to do trading. Fortunately for me, with my smartphone, I got internet access during my Sentinel Island. Give me the public internet, so I access it. So I buy options. I buy 2 contracts at each contract at 275. 275. Each contract is 100 units. So one contract at 275 that's 100 units at $275. Notice the timing. The timing is at 4:55 p.m. Okay, this is not Singapore timing. This is not Greece. This is not US timing. This is Greece timing. 5 hours difference. See lah. See lah. 5:45 5:12. Take profit at $4. 5:34. Okay, 39 minutes later, take profit at 5:55. Instead of shorting the shares at $238, I bought an option at 235. A bear option at 235. Okay?
So the option actually doubled. The price of the option actually doubled, almost doubled.
More than double. Okay.
During that time.
Yeah, because the market dropped. You understand me now? In fact, if I hold longer, if I don't take profit, there are these particular options from 275 okay, by the time I do the screen capture or using screen capture on my smartphone on the trading on my mobile trading app the 275 end up $12.18. If I have not take profit at 5:55 my profit will be at $12.18. Can see the 12.18 here.
Yep.
So this is what I call fixed risk trading. 275 only. What's how much to lose? The reason why normally I put more contracts than that, but obvious because I using a public internet and on holidays, I don't think it's a good idea to put 10 contracts, correct? Just in case internet got problem, then what should I risk it? Anyway, it's just a nice after I make couple $1,000 for this trade, and okay lah, it's enough already lah, not too much covers souvenirs and makan money down there. Any questions so far?
No.
So, if you are competent while doing, you can use options to substitute your shares. Okay, I repeat. Not all shares can be substituted using options because some of the shares especially those poor liquid shares or unpopular shares can be done. But if you're talking about Tesla, talking about Microsoft, talking about PayPal, talking about Walmart, those are common, what we call popular, what we call highly liquid optionable shares company. We can use shares to replace stocks. Okay? So now, if ask question now, if I shorted Tesla at $238, do you think how big a stop loss must I put?
Shorted
If I shorted Tesla at $235, $238 example okay, how much stop loss must put? You see now compared to me buying 4 days options, short-term options, because I tend to do it as a day trading, I buy $2.75 options. Which one bigger? A stop loss on 208 short position of $238 stop loss, or buying option at $2.75? Which one is more capital productive? Which
Mm.
one is less risk?
Just yeah lah. I mean, if you put a stop loss
That
typically at about 2 to 3%, then obviously the absolute value will be much higher for a stop loss.
yes, not only that, when you short something at 200 $238, your margin requirement must at least the $12,000 $13,000 at least.
Mm.
Correct. When I short position, definitely when you short position, definitely got margin hold, correct. At least 50% of value, if not more than 50% of value.
Mm.
So
Okay.
so now you understand why I teach options? Yeah, by the way, I do trade shares and futures and CFDs. Okay? But I
Mm.
try not to teach those because the risk of shorting the shares at $238 versus an option of 275 which one is less risky? You see me? I teach you I can at least I don't worry about you lose control and you lose $10,000.
Mm.
Next week also can buy next week at $4 then take hold it for 3 hours after dinner sell it for $7 then sell it for $5 buy for $4 this is what I
Mm.
call fixed risk trading. When you buy options you like something like buying insurance. You buy
Mm.
insurance for $500 definitely either you claim it or you lose it or you close it, you know.
Mm.
So how much risk have in this case? I buy next week's a bear position for $4 $400 per contract basis.
Mm.
It's better than you. It's
So,
better. Yes.
mm.
Yeah.
So Thomas, just a question, right? So, when you buy stock shares, FX, all this, you look at the chart of the instrument itself, right?
Depends.
So, huh?
Am
Oh,
I directionally trading or what type of trading I do it? Am I doing a directional trading or I doing what you call the volatility scalping or I do option premium trading? Okay. There is so
mm,
many ways to trade options. Shares, either you buy long, buy to go up or sell to go down. Options is multi-dimensional and
mm,
cheaper.
okay.
Yes, you can use you can instead of using shares or CFDs to trade, you can use options to replace your shares to replace your CFD to trade. Can or not?
Mm-hmm.
Yes, definitely. Now got choice out. It's better to spend $1,000 worth of options or spending $30,000 worth of shares. Which one better for you? Say now, whether
Okay, so,
yeah,
mm, so down to that question, I think the expiry date has got something to do with it also, right? So,
yes,
if even if you buy options, then even though your risk is limited, you are still subjected to the expiry. So it depends on when the expiry of the option is.
yes. The expiry is for you to choose.
Mm,
Is it 3 days or is it 10 days or is it 3 months or is it 3 years? It's up to you as a trader to choose.
mm,
Means you
mm,
choose, you calculate, you choose before you click the button send to the market. So if you want to say, Thomas, I interested to buy Apple. I think Apple can go to $500, but I don't want to pay Apple shares. Thomas, can I use options to substitute Apple shares? Yes. You can use options to substitute your Apple investment shares for up to about January, I think up to January 2023 or June 2023.
mm,
So instead of buying the shares at the inflated price, you can use 10%, 15%, or 20% of the share value. Go and buy a long dated options that last you 2 3 years. Which one better? 20% of share value for options that give you the right to buy a share at the price you want for the next 2 years, 3 year cycle, or you want to pay
mm,
full in cash for the right to hold the perpetuity. Which one will
mm,
depend on you. What's the objective, Thomas? I want to trade. I want to invest for 1 year cycle. Then option is better. Thomas, I want to invest for my grandchildren education funds. Then shares is better. You understand? Say now. There is a reason for everything you do. So they must ask what's the objective.
mm.
Any questions?
Nope.
This is one my student account. You can see buy for 490, take profit at $11.80. And for how long? 9 minutes. Okay?
Mm,
Let me go and show some other slides. I did promise you to show you the multi-dimensionality of options. So I need to find something for you. Now, before we go further, can you see here?
Mm. Yeah.
Can you see a design here? Sorry, give a minute. Wait, okay, this when I said for you, now we're looking at the way of the thinking trader, because most people are what I call strategy based. This is what can you see the chart pattern here now? Can you see the
You mean
slide
your
here?
slide? Yeah.
Yeah.
Yeah, I can see your slide. Yeah.
This is your thing here. Most of you are what we call strategy traders. Means that you have a particular strategies, have methodologies, have a particular chart patterns in mind, or Bollinger Band or CC China, whatever it is, multiple 5 time frame analysis, Elliott wave or fan or whatever it is. So this is what I call strategy based trading. So most probably you start from the bottom, you trade. Okay, for me, I try to teach people. I try to teach my students to be a thinking trader. Means that market opportunity come first, you come second, strategies come last. You understand saying now? Most of you are strategy based or methodology based. You look at the market based on your strategy or your methodologies to find trading opportunities, correct?
Mm. When you say market opportunities, how do you identify that?
This one hard to explain to you lah, because
Mm.
this one
Okay, because where I'm coming from is when you talk about strategies,
mm,
all that is actually looking at market opportunities, right? So you look at trends, you look at maybe even some fundamental news, and then
mhm.
things like that. So there's a collective of so-called variables that you use to input into your framework, and you say, okay, is it a good opportunity to trade? And then you go in and find your entry, exits, and all those kind of
This
things.
is what I call strategy based, because
Okay.
you have a strategy in mind,
Mm.
you have a system in mind.
Yeah.
Okay, here is different. You don't have a system in mind, you don't have a strategy in mind. Yes, you have what we call a big picture, what we call a portfolio, what we call trading plan, trading management system. But the strategy is
Mm-hmm.
always last, you know. You notice, look carefully, market great opportunities. Yes, check. Let's say you check trade feasibility. Based on your market understanding, based on your skills, your knowledge, based on your risk capital, based on emotional capital, can you trade a trade? Yes, I can do the trade based on my capital, based on my knowledge and understanding. Next, let's say, but what's my objective? Okay, should I do intraday scalping? Should I do intraweek or do I swing? Do I do a traditional 1 year, 2 year trade? Fine. I decided to do a intra-month trade. From there finish. Okay, I decided to do a 30-day trade. Next, go to the market. Okay, based on I want to trade gold. Next, based on what trade gold, correct? What should I do? Should I trade spot gold or trade options on gold or trade futures gold or trade gold ETF? Okay, you mean lah?
Mm.
So from there, okay, so I decided to trade
Okay.
options. Because options is cheapest. Next, after options, what should I better job? Should I buy straight call, straight put? Should I do vertical spread? Should I do iron condor? Should I do all the different strategies? Okay, I decided to do a straight call. Then should I buy? Should I sell? Okay, I decided to buy. Then from there, you decide the entry parameters, all this sort of thing in. So there's a difference between
Mm.
strategy-based trading and market and you-based trading there. So in my trading class a student for a same particular trade we end up by using 2 or 3 different strategies or methodology to trade the opportunity there. And each student may have a different strategy. You may use a different strategies or different methodology to trade the underlying there, depending on their objective and their so-called their feasibility there.
So you're saying that you define your objective first, intraday,
Of
intra-week, month,
course.
quarterly.
Then from there, he decided, should I trade shares? Should I trade options? Should I short or long? Should I trade CFDs? Should I trade futures? Should I trade ETF? Example like that. Example like gold like that or silver. Silver, we can trade physical, what I call gold mining companies. We can trade physical gold ETF like GLD gold or XAU. XAU Now you can trade CFDs or spot gold also can. You can trade options on gold futures, options on gold ETF, or options on gold index, or you can trade slash GC gold futures or slash GL SL gold silver futures contract also can. You see now?
Mm.
So with you, I explain to you that way because you have the account size, you have you got a good foundation experience for me to explain to you in that way. If beginner, I can't explain you that way because you understand trading. Because beginner say I want the methodology. Methodology is useless. Methodology is like you buying a car, expect the car to make you a champion driver.
Mm.
The car don't drive, no. You the driver drive the car, okay? Any questions so far?
Nope.
For you, you can go the thinking trader way. For beginners, cannot. You must go my system way. Why? Because if you cannot handle a strategy properly, then I teach you how to think. You definitely will got problem. Okay?
Mm.
Mm. Next, we'll go to next step. Next step, a slow step. Start. Let me share to you certain things. Go in here, click here. Any questions so far?
No.
Not this one. Get my breakfast slideshows here. One. Click here. Okay, you can see the slide here.
Mm. Yep.
Uh, this is this is a typical way I trade. A mixture of futures, mixture of options, mixture of shares here inside here. So to me, a good trader must see market, trade market. Depends what you want to do a trade. If you want to do a scalping, you want to do a scalping trade, then a futures or share position will be better than the. If you want to do something that there is a swing trade, then options will be better. So end of the day, whether which trade you want to do will depend on a few things. Depends what is your objective, what is your budget, and things like that. So to me, shares, futures, and options are interchangeable. Like here, like that. This is intraday trading using futures, shares, and options. You can see here, the one top is slash 6E. You understand 6E? You understand 6E or not first?
No.
6E is the Euro USD futures.
Oh, okay.
One standard this is exchange traded. One futures contract represents 125,000 euros. Okay,
Mm.
I short the euros. Okay, at 1.339. I put a trading stick buy. I take profit at 1,331.51. So I make 40 pips. 40 pips
Mm.
times 120 $12.50 times X number of contracts, etc., etc. This one is happen to be intraday trading starting. Then they
Mm.
say stocks. Stock trading is the most expensive one. This one is actual real trade, my personal trade now, not edu trades. I go and buy 1,000 shares on next week's at $344. I only make $1.24 and hold it for hold it for just over 1 hour lah. But the problem with
Mm.
trading shares is this. Yeah, shares is one thing good, 100% correlation. But the problem shares is tend to be very expensive.
Mm.
Next, here is option trading, day trading options. Buy one put, bearish put for $11.30. Hold it for 12 minutes, sell for 12:30, 12:60. You see, buy 11:20, take profit 11:32,
Mm.
11:33. So both of them are called doable. Which one better will depends on what you want to think of. When I trade next week, buy 1,000 shares, my capital exposure is $344,000. TD Ameritrade, like all TD Ameritrade, US broker will give 4 times leverage. So I end up I will have a margin hold of $80,000. The
Mm.
futures contract per contract will need about $4,000 a time. If I buy an option now at $11.30, $11.30, one option number 100 is $1,130. So which one have the least capital exposure? You
Mm.
should know.
Yep. Yep. Yep.
Here is a picture, a screen capture of a
By the
portfolio.
way, the option that you did just now, right? When was expiry? Was it a 1 month option, 2 months, or?
That will depend on my nature of trading. This is why I meant to be a
mm,
day trader. So if I do day
mm,
trading, if I go and buy, I want to do a 3 days trade, why should I go and buy a 3 months options?
mm.
You understand what I'm saying now? One thing about
Yep.
efficiency of market, if I go and do this trade for, I'll put the trade for tonight, Wednesday night, for Friday to take profit, why should I go and buy a 5 months long options? Not
Mm,
efficient, not productive. One thing I love about options is
mm,
that they let you to micromanage your capital to the duration of your trade. Correct.
mm,
If I do a 5 days, I go and do a 5 days options versus a 5 month options, which are more expensive. The 5 month options is gonna be super expensive compared to this
mm,
5 day option. And secondly, one
mm,
thing good about option trading with the expiry dates is that they keep you honest.
mm. What do you mean?
If you buy a share, you can pray and pray and pray. Pray and pray. Okay? Correct me wrong. You're laughing. You understand what I'm talking about? That's the reality of life. Okay,
Mm,
sir, just say lah. Actually, it's
mm,
supposed to be a intraday trade because you buy shares, you refuse to cut loss, then become swing. Now swing you lose some more
mm,
money, then become positional. After positional trade
mm,
after that become a investment. After that become retirement. After that I hold some more
mm,
don't mind for my children education, for my children education fund. Before I can give the children the company got delisted.
mm,
Started off as what? Started off as a control trade, day trading. Sorry, you are
mm,
Singaporean, correct? And I don't. How old are you now, sir?
mm. 50.
Then you know what I'm talking about. Control period. You know lah. Lose money, refuse to cut
Yeah.
loss. Pay the money,
Yeah.
hold some more. Good company sure make money back one. Yeah.
Mm,
That's why you're laughing, correct? One thing about options, keep you honest. If you're
mm,
gonna do a trade for this Friday night, it's definitely gonna be cheaper than doing a 3 months or 5 months options. So the number day expiry, which day expiry you choose, it's up to you to choose. Okay?
mm. Okay.
You can see here now. This is a portfolio setup. This one is a bit old, but I think it's still perfect. The system is still valid. The dollar value must change to reflect the budget per trade will have to change to reflect the value of the underlying. Be fair,
Mm,
okay. Look carefully. Facebook $16,000. Can do a trade for 250. Can buy an option for 400 or do a spread trade for 250.
mm,
Amazon, the time was this was quite old. So now it's 4,005. You can buy a spread trade of 250. So which one better? Depends on what? Depends on your needs. Depends on your objective. Depends on your capital. Okay?
mm.
Any
Yep.
questions? Okay, yeah.
No.
Let me share first. So now, by the way, this is not joking. This is a standard template for I teach my students because I don't believe everybody shall put all your money into one trade or two trades. Here is a
Mm.
portfolio trade management plan. You take a look at it.
What's the columns? What do you mean by 5K bullish, 10K bearish, 50K neutral?
Because the first part is referred to account size. Second part, the bullish, bearish, or neutral is referred to your sentiments of the moment in time. You notice or not? You see now? So I don't believe in such thing. Oh, I bullish. I put 80-90% of my money into bulls. And nothing wrong with that lah. But then what's the problem if you like that? That means your belief system or your belief system or your prediction your predicting system must be 100% right, lor.
Mm, mm.
Okay.
Okay, okay,
So you're gonna put 100%
okay.
80% of your account size into bullish now, and something happened to the market, you are asking for trouble, Correct me, I'm wrong. A portfolio means what? Concurrently, you must go bullish, bearish, and sideways. What I call sideways or kangaroo trades in position one time. So you cannot be telling me you got a basket of 10 trades and covering bullish, bearish, and sideways. You tell me all the trades lose.
Mm,
Tell me now. So this one will
mm,
help you to maximize your learning exposure while minimizing your trading account into market abnormal behavior. Like 50k like that, 50k, 50k, 30, 60% capital risk means that out of 50k, you only can use $30,000 only. From $30,000, you can divide it into one trade. You can divide it in 30 trades of $1,000. Means that every trade is
Mm.
$1,000. No
Mm.
margin, no leverage. Okay? Any questions so far?
Okay. No.
So this one will help you in the longer term to be a kind of better, more all-rounder trader. Nothing wrong using chart patterns or behavior to come to trade. But this one, as a beginner level trader, I tell people, before you specialize, be a generalist can or not. Okay, trade all the different styles. Trade all the different style that you can emotionally and financially afford to trade. Then after once you trade enough for your experience, after 200-300 trades, then you want to specialize. Then I said, go ahead, specialize. Any questions?
No.
In the world of trading, got three style of trading: hunter, fisherman, farmer. So your trading is 2-3 weeks long, correct? That is
Mm.
called fisherman. Fisherman
Mm.
is also like the hunter like that. Must go to the sea, go to ocean, go to jungle, predict where the market is. Then you put a trap in. Then after X number of days, you go and bring the thing so called bring the cash in. Hunter, you know lah, day scalper, active, aggressive, also directional trader. Okay, a good trader can trade all three. Me, I can trade all three. Okay, but a lot of people tend to specialize in one or two. But it's best to learn all three because why? Let me explain to you what's the problem. Market, you cannot rely on one style of trading. If that's happen now, let's say you're a swing trader and you got a lot of position in swing trader and market suddenly tank, do you got time to cut loss? Is it? Do you think it's a good idea to cut loss as the market dropping? What do you think? Hello?
What was your question?
I said, if you have a nice bullish position now, 80,000 position,
Mm.
if the market tank for
Mm.
whatever reason, do you think it's a good idea to cut loss or go to pray and pray?
No, no, you cut loss.
No. If in the event my student will not cut loss because the market tank, correct? Now after let's say abnormal collapse, correct? Very often the after market will retrace back to mean correct? So if the market collapse now, for your case, most probably those people who got those big account size like people like you or more, automatically go to hunter mode. They will do what? They will short S&P 500 futures.
But let's say it is contrary to your analysis. Let's say you
No,
have
no,
a
no,
view,
no,
right?
no, no.
That's
We
why
don't.
you take a
No, I
position.
repeat again. When you enter a trade, something. Can something happen to Joe Biden now?
Yeah,
You see, then afterwards,
yeah.
the thing collapsed in for 3 hours, 4 hours. Then 2 days
Mm.
later, the rumor come out with force, or come out 2 hours
Mm.
later come with force. Then you be stop up unnecessary, correct?
Mm.
Remember, you are analyzing based on normal market behavior. The hunter do not rely on normal market. Hunter mode is best in what? In abnormal market conditions.
So are you saying that it's trading on news rather than
We don't trade on
charts?
news. News, we
Okay.
don't make money on news, my friend. We trade on the market movements.
Mm-hmm.
We don't care
So
the
you're still
news.
looking at charts.
We just follow the price. Trading can be divided into fundamentals, technicals, and price action trading and option premium analysis.
Mm.
Let me show a trade yesterday night. Yesterday night I make $3 in short 11 minutes. Just imagine. Do share trading, I make $3 in 11 minutes. Okay, so now hunter, fisherman are directional traders. Farming style is different. Farmer is a type of trader that do not need to look at chart patterns. Farmer just farm. Okay, this is option trading style. Can see here now. Can see here now. Directional
Yeah.
trading is the most common one. Shares, CFDs, futures, warrants are directional. From here itself, one thing, options can let you do income style trading. Income style, you can do earnings. US market every 3 months got earnings cycle. This week like that. This week we got earnings on Apple, Tesla,
Yeah.
Tesla coming soon, Facebook coming soon.
Yeah.
Then also I said,
Mm.
okay, then I want in between the more advanced option got abnormal volatility, multi-dimensional trading. Means up, I can short February, long March. That's a power option trading.
Mm.
I could do strategies that short February, long March.
Mm.
Okay, let me share with you what is a farming trade. Can you see one on top here now? This company called Boeing. I sell
Mm.
income farming trades called a better called iron control. It's fixed risk. I collect $1.03. I hold it for 7 days. I buy back for 45 cents. The market move up, move down, sideways, no problem. As long market stay between what? Stay between 250 to 3570. I will make my money. Okay. This is called farming trades. The rest are directional trades. You can see buy vertical spread. This is a bearish trade. Buy 115. Hold it for 3 days. Take profit at 210. Buy 95 cents. Hold it for 2 days. Take profit at 190. Then better still. Buy 120, 120, 120, 125, 125. Take profit at 190 the same day. Okay. So they got income farming trade. Income farming trade is a form of trading that we sell premium onto the market. Okay, here's a sample trade now. This will help you understand. This is not my trade. This is one of my student trade. Can you see? Can you see the slide now?
Yeah.
Can you see now? First left hand side,
Mm.
open at 9:54 p.m. Buy a option. Buy a bullish option trade
Mm.
on
Yeah.
Google. Google that time was
Mm.
trading about $1,400. Okay,
Mm.
buy at 9:54, sell to close at 11:44 p.m. means around about 2
Mm.
hours. Buy 140, sell 375.
Mm.
This is one of my advanced students. I call it hunter trade. Means like in out 2 hours, okay, make 100%. Easily make easily more than make almost 180%, 150%.
Mm.
Of course, you can buy Google shares. Yes, you can go and buy the Google share, no problem. It will cost you only how
Mm.
much only? It will only cost you maybe $1,379.
Mm. Understand.
Some of my student trade. Swing trading. Swing trading like that. So every trade notice is not the 200-300% return you make. The fact every trade going they prepare to lose 70 cents or whatever. For this guy, his budget is $300. So he said, I buy 70 cents. 300 divided by 70 cents, I can buy 4 contracts. I buy 4 contracts of 70 cents, my risk is $280. Hold it for
Mm.
5 days, capture profit 285. This is my student trade. When casino, buy 45 cents, hold it overnight, capture at 95%. So you notice when we do start trading, we can do multiple positions because every trade we go in is prefix a dollar value. In fact, your trading your prefix dollar value will very often dictate your trading budget. This guy, his budget is only $100 per trade. You understand me? So that's the reason
Mm.
why I buy 45 cents. If your budget is $1,000 per trade, then his strategy will be different. His dollar entry
Mm.
per option will be different.
Mm.
This guy managed to hit a jackpot. Enter on the 26th last year. On the 27th, the market collapsed so badly that got suspended. He's $1 able to take profit at 8. You see now, it's not the it's not the 800% return problem. Big thing, it's the fact that his risk is only $100 only. So even the market go against him, how much you lose? $100. What I call fixed risk trading.
Mm.
Just now I sent you a picture of the 10 trades, correct? 10 trades correct. And that one, some idiot challenged me. So at the end, this guy tell the whole class, the whole class, Thomas, sure or not? Well, I 10 years experience trader. Sometimes I cannot find even 1 month cannot find two good trades. Got me irritated. So what I can do on the spot, what I did, I did 10 trades in half an hour.
This was a 10 trades.
You see lah, what time open? 10:11. Last trade 10:40 leh.
So, Thomas, can I say that
Mm.
when you say market opportunities, you almost open up a chart? So, let's say, does it mean that you have a view already, or you basically open up a chart and look for opportunities, and you can sort of say, hey, look, there's opportunity here, just go in, do a trade.
Yeah, yeah,
Is it something like that?
something like that. Okay, my student can do market research in 1 minute, in about 2 3 minutes. Okay,
That part is the market understanding part, or basically you're looking at opportunities in the pricing.
both for same. All can be done in 3 minutes. I'm not referring to me. I'm referring to my students. That means a person go on a computer, look at the chart patterns, look at option pricing, structure a trade, send a trade to the market in 2 3 minutes. If those are proficient students, of course.
Mm, mm,
Your job is not to wait 10 hours. Your job is not to wait. Is our job is not to wait. Wow, Thomas, the pattern could happen. So I must wait. I must wait 5 days, 5 nights for this pattern to happen. We don't do that way one. We literally based on the rule of my
mm,
rule of trading is based on C market, trade market. That day you enter, you attend the talk, right? You notice a lot of people ask questions. Okay, I
yeah,
was I
yeah,
was
yeah.
structuring a trade down there. Okay,
Mm,
without giving the specs of the trade my students are literally see the trade, understand what's going on. They will structure the trade to suit their needs. In fact, most of the question that night was asked. Those are my paid students.
mm,
They're not public members. Some are public members, but most are paid students. They ask the question, ask the so ask them, analyze for them. So your job is to analyze what you call trading opportunity as fast as possible. One thing good
mm,
about US market, let's be honest. US market, we don't talk about the whole market. We just talk about S&P 500 index. S&P 500 index got a basket of 500 biggest company in America.
mm,
If you just focus on S&P 500 index alone, you definitely got more enough of trading opportunities. Yes, I say,
mm, mm,
okay? And now we're talking about shares only. I haven't talked about index trading. Index trading,
mhm.
I tell you, full opportunities to trade index, okay? I tell you first, okay?
You're talking about the three big ones, is it?
We're talking about Dow Jones and S&P 500 and NDX and Russell 2000.
Mm,
Russell 2000 happens to be the basket of the smallest 2000 company in America. These four are enough
mm,
already. Most of the time we trade only two
mm,
only. We trade a small cap and one big cap enough already. Because we trade Dow Jones and we
mm,
trade SPX 500. It's almost the same. But personally I prefer SPX
mm,
500 because of market liquidity and less
mm,
volatility than Dow Jones. Because Dow Jones 30 companies are easy to be affected by one or two jokers inside.
mm. Okay. So
Questions?
you mainly trade the US markets. You don't look at China, Shanghai, all this like A50, all this.
Don't need.
Mm,
Sir, I tell my students, I by nature I want to teach people to be a 4 hour trader. When I say 4 hour trader, I'm not referring per day. Okay, I'm referring 4 hour trader per month.
mm,
You understand saying now? While you can do 4 hours a day, 10 hours a day trading. I see no reason why a person should go spend 10 hours a day unless they're addicted to the markets. Okay, to be upfront with you, my students are just starting off students on average spend about 4 hours a week trading. Okay, it's 4 hours looking at the market per week. I ask you a question: how many hours you spend? How many hours you spend looking at the market per week?
Oh, definitely more than 4 hours.
Are you making enough money to justify it? Tell me now. Will you
Mm,
do you think
I would say the effort is definitely needed, lah. You have to put quite a bit of effort.
then
The
why you
preparation process is there, lah. Is needed there.
my word of trading is see market, trade market.
Mm,
You see now, basically like tonight like that I got class on in live class. So tonight most probably we end up my this coming class student okay, most probably end up maybe got can do 3 to 5 trades tonight. I'm very
mm,
confident I'll give them 3 to 5 trades tonight. Easily. Okay? So now the question is this: you have been taught a style of trading that need to spend hours looking for opportunities. My style of trading is minimum time, minimum effort, minimum capital exposure to trade. So my job, I teach people not to looking for the best trades. I teach people to find okay, good trades enough already. Then you do a basket of trades, because as a starter off trader, your job is not to
mm.
specialize anything. Your job is to do as many trades as you can for the next 6 months, 9 months, 1 year, until you settle down, become competent, until become intuitive trading. Okay, my style of trading is what confirmation momentum trend trading, or options quantitative options analysis trading. Predicting, forecasting, and thinking and believing, expecting trading. I'm not interested to teach predicting or forecasting. I'm more interested in teaching what confirmation trading, momentum trading, trend trading, or for directionalities, or for what you call farming style, quantitative option premium analysis. This is my student in 1 week, in 3 days, trade 4 different strategy on Tesla.
Mm.
You notice the
I
word?
mean, all these are all option terminologies, right? What
Yes.
vertical, iron condor,
Mm.
and
And
strangle, all these
yes, all these
things.
are different tools. You mean lah?
Mm.
You notice that he applied 4 different strategy tools on the same company within a period of 3 days. And you notice you don't notice on top here, my class tend to be trade to learn, not learn to trade.
Mm. Trade to learn.
You understand? I said
So
trade
you
to
mean you understand the process, you implement it, then you learn from the process.
yes. Means basically very simple. Like what my a few of my stories say, 师傅下山打架, then we just follow him lor.
Mm.
Every trade I enter now in front of my students are within a budget of their general consensus. I'm not going to do a $50,000 trade in front of my students. Every trade is about 250, 500 to $1,000. Any more than that, you ask Thomas, I'll do a $10,000 trade. I will cut you off. They said we take it offline, or we take it another privately session, because the public generalization to become a good trader, you need to trade. So I ask you a question: is it a good idea for beginner trade 10,000, 20,000, $50,000 trades, or better to do a
No.
500 to 50 or 500 to 50 trade?
Or even those what they call it, those fake, not fake accounts, like fake money, basically.
Demo account I don't like too much.
Ah, demo.
Why?
Huh? How come?
No fear, no greed, no agony.
That's true.
No fear, no greed, no joy, no agony, or
Mm,
no joy of winning, no agony of losing. How you learn?
mm,
It's very. A lot of people say I learn the process. Process is not the problem. It's learning to
mm,
understand your emotional psychological. I tell my students,
mm,
all of them, prepare to lose 20 trades in a row. Your job is to trade to learn, not trade to not trade to not trade to make a lot of money. If you cannot trade to learn properly, then making money should not be a target. That's a problem. I ever trade live, day trading live with my students. I enter shares together. 8 students enter with me. 4 students make money. 2 students break even. 2 students lose 50%, lose max stop loss. One of them blow the stop loss. And
mm.
I was doing live, candle by candle, price by price, in front of them in a live market context, and they still screw up. So it's never not about methodology or strategies. It's about the it's never about the car. It's always about the driver. That's why I'm not focused. I'm not so much. My focus now is to make sure you become a good driver.
Mm.
At least okay lah, not good driver. At least a okay driver lah, please lah. You cannot even survive okay driver. Don't say become good lah. Any
Mm.
questions?
No.
Okay, here's something here. In the world of general trading, you are using example of a buy shares, market go up, or market go sideways. Options is multi-directional or multi-dimensional. You can trade in a sideways volatile market, also can make money. You can trade in a quiet sideways, you can trade in a quiet sideways market, also make money. You can trade ultra monster move. You can trade option premium volatility. Even the chart patterns don't move, you can still make money. These are some of the trading opportunities available in the market. For share trading, CFD trading, future trading, market must be going up or buy down. For you to make money, you must be right. Option trading, if you structure it properly, you can be wrong and still can make money. Any questions so far?
No.
My style of trading very simple. We don't predict the market. We do not need to know where the shark's going to be, wherever it is. Because most people spend a lot of time and do market analysis, do all this. My style of trading is what? Confirmation trading, trend trading, moment trading. Means what? I teach you to be a pilot fish. I teach you how to recognize the money. We follow the money, especially option pricing. Because what? Okay, let me show you something about what's so powerful option trading. When you do chart pattern trading, chart pattern trading, you're basing on historical data. Do we agree or not?
Mm-hmm. Mm-hmm.
Option pricing is future tense. Okay, okay. Option pricing is the future tense. Let me show you that. Okay, before we go for, let me run fast through. Intraday trading, intra-week. So I'm very particular in time frame sensitivity, because if I go and do a 14 days trade, then my numbers must be suitable for 14 days, right? Like, a lot of people say I want to buy shares and pray. Don't do that. So come, here's something carefully. There got 4 forms of market analysis. 1, fundamental analysis. Fundamental analysis is of limited use to the traders. Why? Because fundamental analysis is based on what you call earnings report or economic report that come out every month. Correct? Come every month. In case for earnings report, come every quarterly. Correct me wrong. But so can you use fundamentals report of fundamental analysis or current report to do a 14 days trade or a 10 days trade now? Do you think is it relevant now to have a 3 months data to analyze to do a 10 days or 14 days trade?
Fundamental analysis.
Yeah. Companies come every 3 months. Countries come every month. Non-farm payroll, FOMC. European Central Bank announcement. Bank of England announcement. I trade all, no? Okay, like,
No, like anything on immediate use, usually you don't chase.
Yes, because why? If your trade is 14 days, 21 day cycle, fundamental analysis is no of limited use to you, because fundamental analysis is only good for more higher time frame. 1 year only got 4 earnings report only. Then you want to base on earnings report. Then end up you're trying to do value what called value analysis under what called value analysis or whatever type of analysis. You must buy something hold for 2-3 years, at least, or 1 year at least. Technical analysis is easy lah. Thomas, I base on the last 5 days 50-minute candlesticks. 1 day, one trading US market session is 7 hours. 1 hour you got 4 candles, so 1 day 28 candles. If you analyze 5 days, you analyze 120 candles. No, 140 candles. So they're called technical analysis. Okay. Price action trading is different. Price action is based on the last 2-3 candles only. So technical analysis fundamentally is based on past 10. Price action trading is based on present time, based on the last 2-3 candles, based on the what we call 2-3 candles, we will trade the market. They call present tense candlestick trading. option premium analysis, option premium analysis, or quantitative option premium analysis is based on option pricing. This is more powerful because options premium is always future tense. You notice the word don't need to analyze chart patterns because the buyers and sellers of options is dictating the future potential movement underlying. If everybody believes Apple can go up by $50 by 19th of February, okay? Example, do you think the options for 19th of February will be cheap? Will it be $10 or will it be $50?
No expensive.
Because why? The buyers and sellers must come consensus. The buyer want to buy cheap, the seller want to sell expensive. So if everybody is going to be $50 plus minus, definitely the options and the money call options for 19th of February must be around $40 to $50. Maybe $50 plus minus around there. Depends on who is more bullish. If the thing the buyers is more desperate to buy definitely above $50. If the seller is more desperate to sell then it will definitely below $50, slightly below $50. So why we call
So
that's
you're
why
saying the options
yeah.
pricing will be a indication of the future price lah.
Of course the buyer and seller must come buy one buy cheap, seller sell expensive, correct? So who's more desperate? If everybody know that Tesla can go up by $500 by 19th of February, you think Tesla will cost you $40 option can cost $40 Definitely will cost more
But
than
let's
that, correct?
say, but let's say in situations like crashes, usually there's huge euphoria in the market, right? People keep buying, and then
No, that is
the market
good.
keeps
I got
changing.
strategies that love it. I got strategies specialized this type of trading, okay? Okay, that one is
Mm,
non-directional trading. That one is pure premium selling really. I tell you, it's gonna be fun, man. After
mm,
I show one example to you, then you die laughing. Okay? Yesterday night, I
okay.
did a trade on GME. I show you to you, you die laughing, okay, this one trade. Expect the market is not so weird, so fierce, I think. Okay, let me show you. Let's start going up. Okay. Nope, I don't care. Let me check first. Somebody asked for discount. Sorry, I don't believe in discount. My price under class because I the firm level I trade to learn. My practitioner level class it happened officially 4 months long, 4 months long, 12 sessions. That means that every session is trade to learn, not theory class. And now ask me for discount for what? Okay, now stop. Let me give a minute. Let's go back here. So why don't I on my platform we analyze it better? Are you free now?
Yeah,
If you're free now, why
yeah,
don't we
yeah.
analyze it? It's best. It's better.
Yeah.
I talk this, you do may not believe it. I might as well show you to you in the market price in real context better. Then we can debate on it Can market be wrong
Mm,
Can, but between I and you want to bet against the market? No correct.
mm,
In the longer term the market will win you Like casino like that You can be lucky some of the time You cannot be lucky all the time You know how casino make money Because they got extra edge of 5% extra edge so that's why they can make money in the long term Same thing for option trader As long as you extra edge
mm.
of 5% 3 to 5% extra edge 10% extra edge over the mass market of ships you will make money in the long term Okay, tell me a company you want to look at.
Mm, Apple lor.
Okay, now before we go further, let me show some sample trades inside. It's gonna be fun. Where's my trades inside option tutorial market?
Mm,
Market got mad. Ah, this trade I done yesterday night. You see now? Because
where?
I purposely set this trade up because I
Mm,
supposed to yesterday afternoon I was doing what called day trading
mm,
scalping class. Can see now? Enter
yep,
1048.
yep.
Buy 800, buy 500 shares at $87.70. Get out at $91. Okay, when I do a screen capture at time, the price dropped down to 88 to 88.20. Thomas, did you hold on to the end? You didn't go $200. Excuse me. That is a I hate people to tell me backward looking trades. I see market, trade market at the moment in time. I really lock in a profit of around $1,700. My profitability per share is about $3 per share. In how many minutes? In 11 minutes I make $3 per share. Okay, I hate people tell me, Thomas, you hold until the end, you can make $100. Excuse me, I hate people like that because this is what I call backward looking. It's something like driving a car looking back, looking at a mirror. Okay, it's a live trade inside. I make $1,000 more in the market. Okay, now, then next trade we have now. Where is the other trade inside? My student inside here. They coming for class later.
So your classes are all face to face.
Combination of face to face and live lah. But as much as possible, I like to
Oh.
face to face lah. But most of them prefer
Mm,
to I think end of the day, it's best to have one or two live sessions that I can see you the face, we can talk together, I can analyze you better, you can feel me better. Because sometimes I say, I know lah, I know. Yeah, everybody say no lah. Then when you start training at time, wow, all then you can see how bad it is, you know. You understand me say lah.
mm,
Okay, now this is a trade.
mm,
I sell a call, I sell a put on this company called GDM yesterday night at $10 at 10:23 p.m. Singapore time. Okay, you see now, for me to lose money, listen to carefully by this Friday night 29 for me to lose money the market this company must go above $221 or drop down to $52. You understand what I'm saying now? Look carefully, I collect $2,100 in credit for this trade. For me to lose money,
mm,
break even, the thing must go above $222 or drop down to $51 and below. Just imagine how big it is.
mm,
How long this trade is? 3 days. This Friday night. So as long as the damn thing stay between $273, 200 range, as long the market, this company GJ stay between $73 and $200 range mark, I will make my $2,106. The margin requirement for this trade now for retail level traders is about $6,000.
mm.
This trade, do I need to micromanage it? No. This Friday night, I know I will lose. Okay, now let's go to Apple. Apple is not as volatile before last time. Last time it used to be more volatile. Now, okay, listen to me carefully, my friend. Give a minute. Let's see the Apple chart patterns first. I know you love our chart pattern. This Apple chart patterns here. Come, where is it? Come on. Don't be like that. Okay, while waiting for the market to 70, because normally TD and metrics like that one, especially during the pre-afternoon session, it's hard to get. Sometimes it's hard to get chart in, or sometimes it's my fault. Maybe I got too many windows, too many things open. Okay, this Apple now. Can you see Apple now? Okay, sorry, wrong. This is Bitcoin. Sorry, wrong entity. That's why I said. It's Apple now. Can you see Apple now?
Mm-hmm.
Okay, so we have Apple now is about hitting a multi-year high of $145. Yesterday high, and today now dropped to 143. So technically it's still bullish.
Mm,
Okay, we know that based on the price we can see here, it's testing up. So got two choice now. If let's say now you're bullish now, how? Let's say enter a bullish trade. Let me show to you now. Why don't we do a bullish trade now? Because based on our chart pattern, it's definitely bullish. Unless you want to do counter trend retracement trade, then the different thing. Now, what is a stop loss going to be? How long will I hold a trade?
You mean to put in a trade now?
Yeah. Is it not Apple now? Is it not bullish? Example we take it as bullish
Mm-hmm.
Enter a trade now. Market price is
Mm,
145 145, 143 now
mm.
What is the stop loss?
You just put it at the last resistance or about just below 140.
Cannot. Okay, the question is this: if you put on 40 can, may I ask you how long you hold a trade? You see
For
now.
Apple,
You see now. You
mm,
cannot tell me. You tell me you say I 140 can. I hold this trade to this Friday night. I agree with you. But you intend to hold a 14-day trade or 3 weeks trade, then I have to strongly disagree with you. How can you use a 1 day low to for your support reason 9 for a 2 3 weeks long trade? It's not. Is it logical or not? They use
mm,
this type of numbers for 2 3 weeks straight. If you tell me, you say Thomas, I do
mm,
a day trading now. I agree with you. At 140 may be suitable because you're trying to do a tactical day scalping trade. But you want to hold a trade for 2 3 weeks or 130 days. I think
mm,
definitely is this is what I call unreasonable expectations, correct?
mm.
So first,
Okay.
how long will hold a trade first?
Apple,
Yes,
maybe in this kind of situations,
yes.
maybe 1 to 2 weeks, at most 1 to 2 weeks.
Okay, now let's say now we do it for 14 days. Can
Yeah.
So now we do until 19th of February, which is the Friday of the month. So it's roughly about 20 more days away. Okay, can now. Okay, now next.
Mm, mm,
What is the stop loss going to be? Can I be a 140 level, correct? It's
yep.
unreasonable, correct? A 10 day slow is at 125 level, like 125, 126 level. You see me
Mm,
now? Yes, that's it now. Okay, how to calculate? I my own calculation formulas. I already know roughly what the stop loss is going to be really. If you're going to base on this pattern. Now, you go figure out how much stop loss is up. As a trader, one look, you must know what the stop loss is going to be. Sorry, because you are so-called experienced trader. That's why I can be more harsh and demanding on you.
mm.
Your stop loss most probably at 126 level. At least 126 level.
Huh? 126,
Because remember, you hold the trade for what, 2 3 weeks. Anyway, 126 happens to be a 5 day low only. You understand what I'm saying? No?
I know where you're coming
You
from.
understand me now?
But
Logically
one
correct.
two
Then
six,
the 126 level happens to be the intra-month support level. Correct? 126 level, intra-month support level. Do we agree?
mm,
That is
yeah, yeah,
exact.
yeah, yeah.
So unless you got different formulation of calculations, which I don't mind, I got see lah. So you can see lah at 126 level look at the picture. Is it nice or not? Nice man. Wow, this support level is very solid. Like wow, you can see there's one support over here. There's a cluster over there. Like, okay, not bad. I take 126, which is very reasonable.
Mm,
126 divided by 143 is how much? Is how much is 126 is about how much? $14? Wait, $17 I think. Correct me if I'm wrong.
mm,
$17, which happens to be around 12%, about 12% of underlying movement. I know it's on the high side, but respect the market. Your 126 happen to be a 5 day low, my friend. And you want to hold a trade for 2 3 weeks? At least must respect the 5 day low, correct?
mm, mm,
You know what I'm saying now? Now you understand why a lot of
mm,
people got stop out because they based on trading based on what you call delusional expectation belief system. If you tell me you want to do a trade for this
mm,
Friday, Thursday night or Friday night, enter tonight, maybe for tomorrow night, I agree with you. 140 is quite reasonable. But you want to hold for 2 3 weeks.
mm.
Anyway, don't mind. Next. Now it's gonna be fun. Based on technical analysis, we got about $17, which on the high side. Anyway, $17 is your risk budget now. It's a predetermined dollar value. You should not use. You must do a trade that do less than $17 in valuation.
Thomas, sorry, what's all this? I'm sort of trying to
Mm-hmm.
look at your screen, so I'm not sure what I'm looking at actually.
Now can you see the word? Can you see the option change here? Can you see Can you see the word
Where?
Apple down there? Upper right hand side.
Yeah, 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 yeah,
Uh,
yeah, yeah.
this is the price code for all the different contracts options available, bullish, bearish, for multiple different time frames from 29 January 2 days away to 5th of February 9 days, 16 days, up to March 2023, 779 days away. So
Okay. Okay.
every time frame, every contract specs have its own dollar value. So by doing this, we can help us that we know the buy price bid price is determined of somebody buying, somebody queuing to buy at one price, somebody queuing to sell one price. Okay? Now example,
Mm.
we take February 23 days away. February 19 23 days. Look at the price now. If you go and buy a share trade, okay, bullish share trade will cost you. You have not only to commit 114,000 over dollars, $14,300 in called capital exposure. Then you put a $16 stop loss based on a 30 based on the 5-day low chart pattern, so called a major support level. Okay, now will you better to buy option now? How much the option cost you now? How much the option cost you now? $615 ah. You see now? Can you see the word maximum loss on there?
This is based on 100 shares, is it?
All options for equities and index is based on 100.
100 shares. Okay, so 615. Okay, and this is expiring in
19th of April, 23 days away, 3 weeks plus. Cheaper than a stop loss, correct? Half your price, in fact, more than half the price stop loss. See now? So, Thomas, how much money can you make? Stop. You can see the word infinite profit now. So, if Apple now suddenly Warren Buffett decides to buy Apple at $200, hallelujah. On the spot, you're able to sell your contract for $57, $54 physical valuation. Then you can make $48 out of this trade. If Warren Buffett buy over the company within by on or before 19th of February at $200, example, Warren Buffett says take the company private. You sense it?
Mm,
So which one
mm,
better? First, your $6 you pay for. Also another thing is the fact that it's $6 is tell me a lot of things. If let's say now you're based on fundamental technical analysis, you think by 19th of February 21 days away can go up by $50. You ask yourself, if the market consensus is that Apple can go up by $30 by 19th of February, then how come the buying price and the selling price is only $6.10, $6.15 only? You understand?
mm,
But not next notice the this one means this 146 means when you buy an option at 146 call means that you have the right to buy Apple shares at $146 from
mm,
now to 19th of February. So if you think shoot up to $200, I can buy 146. Market price 200. I must sell this option for $54 or more.
mm,
Understand what I'm saying so far?
mm. Yep.
So you understand? Yeah. So this is a way of trading. So you can see 84.50 lah. So we're telling a lot of things. So this is price here, Thomas. Like that Thomas. If for $6 can I go and buy long term buy long term lah? I want to buy March 2023 can lah? Cannot. March
I don't think
2023
so.
is what? Is $29 and $30.
Mm,
How I know $29? 29.50 come from exchange called Q. $30 come from exchange called X. Remember you
mm,
can see the alphabet the B the X the C the Q the Z the M all the things inside all are what we call a reference number to a particular exchange or to a particular market maker or institution. So now we know for a fact that the market is, if you think can go up to $500, look at the market price. General market consensus is not going to happen because they calculated that it's going to be at $29 to $30. If everybody
mm.
believes Apple can go up by $100 by next year, do you think the option price for March option contract for valid up to March 2023 is only $30 only?
No, much higher.
Yeah. So this is what I call C market, trade market, because the price is telling me here, the 29 and the 30 is telling me one story there. The time frame also tell me one story there. Just imagine how many contracts here. Look carefully here. You can see from here to here, from $25, they got price available from 25 contractual spread of $25 to how much Miss first? To 200 and 230 Just imagine how many strikes available. You see Thomas, I think by 19th of March this thing will go $200. Can look carefully. 200 call cost you how much? 34 cents, 35 cents only. That means what? And you want for it to go to 200 means you go for jackpot trading. Okay? You understand what jackpot trading means? Very cheap. Once you kena, you make 500, 1,000, 2,000% return. But low probabilities. You understand say that? So you have directionalities, you have fundamentals, you have your system. Just imagine if you combine it with option premium analysis, option price analysis, just imagine how powerful it's going to be now.
Okay, but Thomas, one thing, if let's say the market has changed, so if you look at since March, April, right, where after that mini crash, market kept going up, right?
No.
So when market kept going up, the way they price options, is it still the same or is there higher premiums nowadays?
No, doesn't care. If that's it, we are traded, we see market, trade market. So higher premiums got higher premium opportunities. Lower premiums got lower premium opportunities. Remember, your trading strategy to do this trade is dependent on what? Depending on you. The price gives you the opportunities. Then your job is to get creative with it. You understand saying? You understand why I said strategy always come last? Example now, let's say you want to do a bullish trade now. Example now, and you say you think it's expensive. Why don't we do this? Go and buy a $1 vertical spread. Instead of spending $6 to do a trade, can you not go do this trade now? Buy a $1 vertical spread. Thomas, 35 cents only. How much money can I make? Listen to me. This 35 cents I can make almost 200% return. What is the profitability? What is the profit? It's 65 cents. What's the maximum loss? You understand why I teach options, why I don't teach shares? I'm quite proficient in share trading. Why options? Because the cheapest form of trading. Lose less. Risk less. Okay? Make more. See now? Ask yourself, if you go and trade shares, is there any possibility to have a 100% return on capital?
No.
What is the maximum loss to trade? 35. Actual price, you must wait until market on then we will know but let's show to you what the market telling me now. Can see everyone got dollar value by looking at the dollar value it's telling me the potential range to move. Oh, by the way, you can use this to trade index also.
Sorry?
You can use this option methodology.
Use this to trade index, yes. The Dow Jones, all this.
Dow Jones can, but I prefer you all to trade S&P 500 better. More liquid, more transparent.
Okay.
Any questions? Let's show you the opportunity. Let me show you. Okay, let me show you one opportunity. Let me show to you. Let me show a multi-dimensional trade for you for the sake of doing it. But this shit is valid. Okay, let's go to SPX. Okay, we know for a fact. Trade. Okay, let's say we do on the 5th of. Okay we do it for this Friday night Okay, let me show how powerful the option is. This is what I call multi-dimensional trading. That means what? If the market go up, go sideways, move, don't move, go up, or go down, you can still make money. Would you like to know now? How do you make money if the market go up by $20, $30, market drop by $10, $20, market don't move a single cent, also can make money?
Talking about hedging, yeah.
No, we're talking about selling. Hedging means what? Hedging implied what? Sorry, hedging implied is what? Hedging implied the following things. Hedging means what? You buy hedging means that it's basically do a trade that you have buy something to protect a position. This one no. This
Yeah.
one we are doing a selling trade. A fixed free selling trade means that we're not hedging. We are collecting money upfront. Would that be happy? Would that be better for you lah? Collect money upfront better now.
Okay. How do you do that?
I show you lah. This is a real life trade real time market based on now lah. Okay Look carefully here. As long the market stay between 3,880 and stay between 3,805 to 3,880. Stay between these two price. Don't move, I make money. As long stay between 3,880 down to 3,805, my profit I will make almost 9. My return over risk is what? I can make 240. What's my risk? 260. Return over risk is almost 90%. Means that market don't move, I make money. Market market go up by $30, I also make money. Market drop by $25, I also make money. This is what I call multi-directional trading. Don't move, I also make money. How much money can I make? I make 240. What's the maximum loss? 260. Do I need to do technical analysis? No. Do I need to predict the market? No. Do I need to micromanage the trade? No. Do I need to put a stop loss? No, 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 no. This is what I call passive trading. Sell and forget. Worst case, 260. Best case, 240.
So can I say that this kind of method is more ranging market?
Don't need ranging market. The market, bullish market, bearish market, let's be honest, the options buyers and sellers will know Think buyers or sellers option market is stupid Cannot see chart patterns Cannot see trend line Cannot listen to news Hey, wait. Angie check numbers tonight, okay? Okay. One of my students here for tonight class is now taking picture tonight. Say tonight I must check this trade, see if he can do or not.
Mm.
You see
What is this thing called buying power? By the way,
buying power do I
see
know it.
this.
Buying power is actually what we call a margin hold. For me, I'm not just a buying power. I'm just doing one thing only. What is the maximum loss? Because very often sometimes the buying power is much very smaller Just now I showed a trade I collect 22,000. I collect $2,000 correct. The buying power is $6,000 but my actual risk is bigger than that, no. So buying power effect is technically is what I call margin. Therefore means that can you lose more money than buying power? Yes, you can. But here, that's why a trader means that we're interested in what? Worst case, what is the maximum total loss? 260. What's the maximum profit? 240. Return over risk 90%. How many days? By this Friday night.
Okay.
Okay. This is what I call thinking real. This is what I call, and your job is not to do one contract. Your job, you can do how many? Look carefully. This is Friday night, correct? Look at available. Look at it. Okay, Monday got 2 days. Can sell one on 29th of Jan. Can sell one on 1st of February. Can sell one on 3rd of February. Sell on 5th of February. If you can see now, how many available? Just imagine, no. So most probably you run out of trading capital, then run out of trading opportunities. This is what I call a farming trade. Once you sell, you leave it alone, hold on to the end. Worst case come to risk, you lose in this case 260, which you know the first place. But you win 240. The return over risk what we call the win-lose ratio is almost 1 to 1. Okay now. And this is index this is not Tesla or GME GME can go crazy, but index normally you don't go crazy on you, correct? You see me now?
Hang on. So just now you mentioned a risk reward ratio. So max loss, max gain, right? Is almost 1 to 1. Is that a norm for options trading when you look at risk reward?
Depends on the market conditions. For index is for indexes on the high side. In fact, my target return for this type of trading, for my index trading in a normal market environment is about 50% return over risk. For shares we want to 100%, 80, 90, 80 to 100% returns for shares, because shares is very much more volatile. Shares is much more risky lah. Index is much more
Mm,
steady. Let's be honest you think S&P 500 the next 2 days will drop 2-3% now? Won't, correct?
mm,
Tesla can go to drop can go up 2-3% easily. Amazon cannot easily. So we for shares we look to have higher returns over risk. For indexes, which is considered more mainstream, we look for lower returns.
mm.
Okay, respect the
Okay.
market. So most of the time we're looking about 50 to 60% return over risk for index. Okay. Anyway, this one is a pre-market price, so we do not know actual price. If the market gives this price to us, we are very happy to take it. But if in the event market don't give this price, how low can we low? This one is 90% return over risk. We can go low at 60% return over risk for indexes. For shares, no.
Mm,
Shares got what we call higher probability abnormality.
mm.
Any questions, my friend?
Mm, yes and no lah. But to be honest, at this point, I'm not sure what to ask. I sort of get the general gist.
So basically, options what?
Oh,
Options
yeah.
enable you to buy, trade with lower capital exposure, less lower capital exposure, lower chance of losing higher chance of losing less money, higher returns over your risk. So in the way of trading, you can use stop loss money to buy options as a substitute for the shares. So basically, you're using stop loss money to trade. Okay, and at the higher level, which you're seeing now, multi-dimensional trading, multi-directional trading, you can do trades. The market don't move, also can make money. Market as long as stay between what? As long as stay between 308 and 288 within by when? By this Friday night, you make 90% return. Okay, can you make more money now? Yes, you can always get higher returns. But what's the problem? But what's the problem is that you need to trade off that. Let's say now you want to have higher returns. Example, you want to have high returns. Example, I showed you. Let me show you the same strategy. You see, same strategies. Exactly the same strategy is called Iron Condor, correct? But look at return now. The return is what? 1,150% return over risk. Can you see now? Lose $40, make money. You make 460. Is it not 1,100%, 1,150% return over risk? Hello?
Mm.
Yes, Major. Of course. 1,000%. I put all my money inside. Stop. Ask yourself. Any trade that give you 1,000% return, high probability of winning, high probability of losing.
Don't know, like, I mean, if I just look at this, okay lah, it's a no-brainer lah. But
No, it's actually a no-brainer. This trade
mm,
we don't touch, because when the return over risk get too high, that means the probability of success drops substantially. This method I show you 3380 3380 will give me a chance of, theoretically speaking, based on Black and Scholes model, give me a chance of winning money of 72% chance of winning money. Okay, theoretically. Then for the downside, give me a chance of how much chance give me? Give me a chance of 72% of losing money also. Okay, so basically this type of trade is high probability of chance of winning money based on the Greek system, the idiots who win the Nobel Prize.
What is so probability OTM is what is probability of
Probability of
winning
out of money. This is
out of the money.
yes. This one is based on dollar and value assessments. So every dollar that you say, you can see literally, you can see the price fluctuating now. The price is fluctuating now because S&P 500 okay, the price start moving at 3 p.m. Singapore, 4 p.m. Singapore time. You see it fluctuating now,
Mm.
the price, the red color, green color, it's price fluctuating. That means what? The professionals
Mm.
are buying and selling now. Unfortunately, this is considered post market. We are not allowed to trade at retail level. Of course, if you are institutional level, got $50 million or $500 accounting, then okay lah. You definitely can trade with this, can trade this one now. But for us, retail level, we should not be looking at this. Should not be looking at trade inside. Most of the time, one thing good about US market is this plus minus 1 hour, 2 3 nights a week is more enough time already. I repeat, if you learn how to trade, you don't need you can just spend about 15 minutes, half an hour, 2 3 times a week. It's more than enough already. For beginners, maybe you spend half an hour, 45 minutes, 2 3 times a week. 1 hour, okay, make it 1 hour a week. Make it 1 hour, 2 times a week can.
Mm.
There got so many different strategies. By the way, this is called iron condor. Iron condor itself for this underlying I have itself I have structured 9 different ways to trade. Level 1, 2, 3, 4, 5, 6, 7, 8, 9 different ways to trade this method I showed you just now. This one is the simplest one I showed you, the simplest level, entry level to trade. This trade is happen to
Mm.
be considered aggressive because it's intra-week. 90% return in 2 days. I think that will be considered aggressive.
Yeah, for
Of
sure.
course, if you want to do less aggressive, also can. We can do up to
Mm.
60 days, 90 days cycle, not a problem.
Mm.
You
So
can,
let's say uh,
yeah.
maybe I such sidetrack a bit. So let's say you have a capital of say 100. How much of that would you maybe not as a starting, but eventually create a portfolio to? How much of that capital would you use?
For you, okay, may I ask you a stupid question? What is your
Yeah.
moneyness level?
Sorry.
What is your moneyness level? You mean, oh, you said Mr. Lam, you must tell what moneyness level. That means, what are you used to make or lose? Because everybody have different game. Some people
Oh.
can lose $10,000, no problem one. Some people only can lose $500.
Uh,
Lose $500 cannot sleep for 2 3 days. So that is your
so range about 10, 20 lah.
uh, then your objective exercise you should not risk for your trading strategies you should not be risking more than 50%. You should not your account size trading include day trading day
Mm.
scalping, day trading reserve should not risk more than $60,000. Out of $60,000 $30,000 what we call determined for swing trading. Means what for directional trading for income trading means overnight trading using options. Then the rest of the 30,000 cash 10,000 or 15,000 standby as cash. Then 15,000 standby for day trading.
Mm.
This is what I call portfolio trading. So you will not die.
Okay.
Because why we stand by for futures day trading? Because in the event market collapse, you have no time to cut loss. You should go what you call take defensive, offensive action, directly short the futures market to capture the movement. So yes, your
Mm.
swing position, your directional swing position will be losing money, but you're shorting the E-mini futures. So are you not
Mm.
taking care of your losses? You see me now? You see me I say now?
Mm.
So there's so many. That's why I said
Okay, the other question
yeah.
then is that your portfolio shouldn't be highly correlated instruments lah.
Yes and no. Okay, you can yes and no. Most of the time example if we trade futures we're checking physical market. Now for most of the time we can end up trading options on futures, options on commodities, options on currencies, options on index, option on shares. The only thing we
Mm.
can't trade out is option on house.
Yeah.
Sorry can options on US REITs can.
Mm.
Okay? Let's imagine, no? You understand me now? So the US market have a basket of shares and things that fundamentally that diversify itself. Like I said earlier, out of 60,000, 50% are exposed to the market. You can trade option on futures, option on index, options on shares, option on ETF.
Mm.
Because your account size is big enough, of course, the account size is 5K, then we focus on shares and index. But if your account size is like
Mm.
I say, like this one, can you not, a friend, $30,000, you can do 30 trades or $1,000, can? Can you not
Mm.
do options on gold futures? Can? Can you do options on Euro USD? Can?
Mm.
That
As a general rule, right? Options. Say, I mean, as a general rule,
yeah,
just generalizing, each contract, say about 100, would be about 5%, would be about 5K, thereabouts,
no,
or 500.
depends. Example now, if we let's say now you do a $5 spread on Google, that's a $500 per trade.
Mm. Oh yeah, yeah, okay, okay, okay.
Can
So yeah, I know you showed me that just now.
uh, $5 per trade, okay
Yeah.
lah, okay lah. Thomas, can I think not efficient. Fine. Then can you not do $10, $20 per trade? Can? Can be adjusted from $5 to $10 to $15 to $20 per trade, depending on your account size, your skills, your competency, and
Mm.
your emotional comfort level.
Okay, correct.
Like I said earlier, there's so many different ways of trading. Okay, like I said earlier, I tell you upfront, I got students follow me, like the student just came in a time, follow me, learning from me for last 1.5 years already, and still learning, no, 1.5 years, more than that, more than that already. Any questions,
Mm.
anything?
No,
Don't
I
know.
guess not. So
Okay,
what's next then?
depends what you want to do, my friend. Okay, the question is, do you have an interactive broker account or US optionable account?
Sorry?
What account you have now?
Uh, I got futures account. I've
No,
got
no, which broker
stock
now?
accounts. Philip, Interactive Broker,
Okay,
XC,
fine. We will use interactive
CMIB,
broker.
yeah.
Interactive broker.
Interactive
Yeah.
Broker,
How much? How many accounts there down there you have? How much free cash you have down there?
100, thereabouts.
In fact, too much money. In fact. Okay. Now, fine. Okay, you can start trading with it. I'll offer you. Now the question is, when can we start the class? When how you want to start only? Another few more questions. One, I need to know what type of personality type are you? Are you a person who need to know everything before you do anything? Or are you comfortable that I explain you price by price, candle by candle, option by options, pattern by pattern? Are you comfortable in doing that? Because I got people who have this emotional psychology need to know everything before they do anything. So which type are you? Are you or more a
Mm,
hands-on practical personality type?
I also don't know. I guess it's a mix, lah, right? For me, the comfort level also goes down with the risk level. So if let's say I'm starting out,
$500 per trade.
so I think right now the key question for me, right, is can I make that jump to options? Because I know zero. So making that jump, I don't know. That's still a question. That's why I'm sort of asking
May
around and
ask you a
seeing if
may
it's
okay, may I
mm,
ask you a question? Are you a
mm.
thinking what type of personality type? Are you a thinker or you are action man personality type?
I tend to do the thinking more. So I tend to do a lot more analysis before I actually act on it, lah.
Then
So
fine.
sometimes
Then if you are
my trading tends to take a bit longer.
then good.
Yeah.
Then option is perfect for you. If you are Chinese say action man commando style, Rambo style then options may not be suitable for you. If you are a thinking trader who likes to spend 5-10 minutes thinking what you want to do before you go and do it, that option is perfectly suitable for you. The question is another question I need to ask you: are you arithmetically blind?
What is it?
Are you arithmetic Are you the word arithmetic Okay, arithmetic or mathematics blind? That means you see numbers only you blur.
Uh, I don't know, like how do I put it? It's more average. I'm quite a visual person, so I tend to look at charts and patterns. But numbers wise, I guess I'm average.
Okay, fine. As long you're not phobia on numbers it's okay, because option trading is always based on numbers. You might have
Okay,
ability.
if anything, I might be sometimes I might be a bit too fixated on the details of the numbers. So that is something negative sometimes because it can actually delay in an action. So
Oh
I might miss a move.
no, don't worry so
Yeah.
much. Most of the time my students, I tell people not to chase the market. I tell you first,
Mm,
most of the time my style of trading is fisherman and hunter, fisherman and farmer. Do you think the farmer need to run after the farm? No I mean farmer just farm, you know. One thing good about
mm,
farmer is that just simply farm. If the market don't give the price today, you can always come back another day. Correct? You mean the hunter need to be there to catch the animal. The farmer, the fisherman don't need. The farmer, fisherman fisherman just put a trap, wait for the trade to come to him. The farmer just farm only, farm, open the trade and harvest later. Okay?
mm,
So it's okay. Why am I scared now? Your itchy fingers character one, C one, I must click button one. Then these options may not be so suitable for you lah. But if you tell me you like to think, like to analyze, like to nitpick dollars and cents, then option is good for you. Okay?
mm,
Uh, I think this by now you should know market is not 100% precise one.
mm.
Market is
Yeah.
you call what you call generalization. Generalization. So it means now you can see chart pattern. Apple now is $6 and 45 cents, 6.55. Can you change to $8 tonight? No, can. Can you drop to $4 tonight? No, can. So this is what I call market movements, market what I call vulgarity, means that market keep on changing and stuff like that. So once you're comfortable with dollars and cents movements, you are perfectly okay with it. Okay.
Mm.
Any questions?
No, not for now.
So the question is this: my level of teaching is multiple different level of style of teaching as per se. Give me a minute. I think my PowerPoint slide got problem. Yeah. Can you see my PowerPoint slide here? No, can't PowerPoint.
Yeah, can.
Okay. Sorry the system got hang. That's why it looks so weird. Okay.
Mm. Yeah,
Now
I
the
can still see it.
can see correct. So in my world of trading got three levels of trading lah. One, entry level. What based on what learning information and knowledge and some practice. Two, practitioner level, which is for yourself. Practice to gain experience, to gain skills. That's why my practitioner level class is 12 sessions over a period of 4 months.
Mm,
It means that we are actually coming here to work out trade to learn. Okay? Then tutorial session, sorry by invitation only. When after
mm,
you do 20, 30 trades, 40 trades in front of me, then we will talk about next level. The difference between
mm,
practitioner level and the tutorial program is simple. Practitioner level focus on strategies. Okay? Strategies, execute all the different strategy and all the different style possible. Tutorial program focus on the market. Then power option class for beginners focusing on the knowledge.
mm,
Because I have to do this type of thing because I discovered that I cannot direct intake people to tutorial program. 6 months, 9 months, 10 months, 1 year, people still struggle it. So now I divide it into three segmentations. The most for your case, because you're considered experienced trader, I'll be honest. If Ray Barrows, you learn from Ray Barrows, I know your technical skill is up, is near technical skills and trading skills must be roughly around there already. Okay, so this one as per se is you can come in at the tutor at the practitioner level. It's a 4 months long
mm,
class, 12 sessions program type of thing. It's a boutique class level lah. Okay, my class is very
mm.
small per se lah. You notice, and most of the time is what I call practical experiential learning to learn skills. So if you
So
follow, mhm,
without knowing options is still okay.
yes, Can you follow me or
Mm.
not?
Okay.
You understand me lah? Well, I can ask you a simple question lah. Do you think the Shaolin disciple learn by reading manual first? You know what I'm saying lah? Do you think the
Mm.
martial artists learn by study the manual, study the theory first, or they start practicing? For you, yes. For if you have no training experience, then I will ask you to go to the power option level.
Mm. Okay.
Any questions else?
No.
Enough information. I think you understand options is option is just a derivative, a subset derivative. But unlike shares and CFDs, the power options that you let you trade multiple different dimensionality, multiple different what you call applications of thing itself. Okay. In my By the way, my advanced option practical class is divided into two major stream. One, directional trading stream. Another one is income stream. So I have to divide this way because I discover I cannot I cannot combine both together because if I do that, I discover to my horrors, people how to say rojak and mix up the selling parameters against buying parameters, then end up losing money.
Mm. Okay.
Any questions?
No.
There you got many different ways of it. Like I said earlier, your focus now for your skill level, your job now is to do this. Okay, a minute. Oh, hang on you so badly. Look carefully. Where are you now? Look carefully. This is a way of thinking, traders. My job is to slowly bring you up from the strategies into the thinking trader level. Okay? This is the ultimate objective for this exercise. Your job is not to maximize profit. Your job is to maximize your learning experience. So, for your trading account size, I expect you to 1 month to do about 30 trades or 40 trades a month.
For options.
Wherever it's possible. You want to do shares also can, no difference. I'm a share trader. But my advice to you,
Mm.
use option to substitute shares. Because shares have fixed open capital exposure. And let's be honest, Apple is $14,000 at least. You want to
Mm.
buy an option it's better to spend $1,000 buy an option on Apple $1,000 than to spend $14,000 on shares, correct? You know
Mm.
where I'm coming from now.
Yeah.
So you can maximize your learning and maximize your learning exposure, learning experience while minimize capital risk.
Okay.
Any more questions, my friend?
Nope. Nope.
You think about it, drop me a message. If later on in time, then we want to talk more about it, we can discuss earlier. I know it's a lot to
Mm.
digest. Just thinking options is a multi-dimensional chess piece. Currently now, as a directional trader, whether bullish or bearish, you are trading one dimension. Either trade up or trade down. Options, I show you just now. As long as the stupid market stay between 3,805 to 3,888.85, I make money. How much money I make? Return over risk is about 90% at this point in time. Can be more or not? Can be less or not? Can. This one will depend on what market give us. We, the traders, must decide based on our knowledge, understanding the market, skill, knowledge, and capital. Decide this opportunity, is it feasible, good for us to take out. That is called thinking
Mm.
trader.
So the issue with with options is that the risk element is not there, other than the money that you put in, the capital that you will lose.
Yes, if we do the right way, structured properly way, your capital exposure is the maximum. Follow what we call best practice. You should not have share risk.
Mm.
The problem is share risk. After anyway for options to be assigned shares, to you not a problem because you're used to trade shares. So it's less a problem. It's only people who got 5K, 10K account size, then got assigned Apple shares at $14,000, then we got major issues.
Mm. Okay. And you were mentioning that
Hmm.
you do face to face, is it?
Yes, I'll do face to face. I prefer face to face, but it's once or twice.
Mm.
Okay. But for you, one thing good about my learning, but this 4 months long class is flexi learning. That means
Mm.
what? Is unlike your typical class, unlike your typical most people typical class, they need you to follow the system and rules, right? My one is flexible learning. Means what? If you can follow me and structure a trade, which is you not a problem because you're already a trader, you can follow and learn from me in real time. So not a problem. I've conducted classes that 100% never see me face to face. Okay,
Mm. Okay.
and officially it's 12 sessions, but reality alive, I already got students already in less than 8 days. Got 4 sessions, 4 class with me already.
Mm.
Tonight is the
So
fourth.
these are more consultations.
More than practical learning lah.
Mm.
Because end of the day is simple. For you to learn,
Mm.
I must sit in front of you, explain to you what is the market opportunities. Because market
Mm.
is full of trickery.
Mm.
Okay, sometimes you say, wow, so good stop. Then my job is to explain to you, it's so good. What's the danger of these good opportunities? Because a lot of things in the market now happening are traps. Do we agree on or not?
Mm.
Yes, I
When
mean
you say traps, means people
traps.
offering
The
training or what?
No, traps means what? TRAP. Traps to for you to enter a trade. Pump and dump.
Oh yeah, yeah, yeah. Yeah.
Same thing for option market also. So my job is to teach you to recognize the good, the bad, ugly, the opportunities. Then you make a decision.
Mm.
If you want to understand what is happening in the market, then it's your job to make a suitable decision based on experience, your expertise, your etc. To make a decision to enter based on how much should I risk. Then you structure a strategy to suit you.
Mm. Okay, got it.
Any questions?
Not at this point in time.
I
I have to think about it.
I
Quite
have
quite
no
a
I have
bit to
yeah
think. Mm.
I have no problem to do one-to-one coaching if I need to. But I said earlier, okay, and a more consultation like today's session. Today's session is the Chinese said is to open your eyes, open your mind to see the
Mm.
potentiality. Are you comfortable with it now? Are you comfortable in
Mm.
reducing your capital exposure by 80% compared to shares?
Mm.
Okay, or even 90%, or even 95%. Okay.
Mm. Okay.
So question now you need to decide to me what type of class module you want to take. You want to take directional? You want to take a directional option class, or you want to take an income option class? Because the
So what's the difference again?
mm, the difference is very simple. Look at here. This you can see here now. Sell class you can see now. This multi-directional trade is what I call income style. Income trading strategies means that basically we are selling options to create positive premium coming in. Directional trade is different. Let's say now you're bullish directional trade for this Friday night. Let's say now you believe S&P 500 is direction will go up. You can do what? I'll teach you how to do buy trades. So basically, one is buy, one is sell. Like this trade like that, your bullish S&P 500 will go up now 20 points this Friday night. So yeah, so you can always what buy one trade here. Yeah, what is the capital exposure? $270 maximum loss. Maximum profit is $230 profit. This is called directional trading. Directional trading means that you are buying a position to take a directional bias in the market.
Mm.
Okay?
Mm.
For you, I
Yes.
think premium selling is better because premium selling don't need you don't directionality need you to be technically right in chart patterns, in market predictions. Premium selling, as long you're not wrong, you make money already lah. Because I said earlier, this trade here is from 3,000 and 3,805 to 3,880. As long as stay between there, market don't go crazy on you. Drop go in market. If market drop 10, drop 500 points. Worst case, how much you lose? You lose 260. Yes, I said.
Understand. So the way you teach these two classes is very different.
Because I can teach all together. But unfortunately, I discover if I confuse buying and selling combined together within the same class, very good probability some of you all may screw yourself up anyhow mix up the parameters.
Mm,
The difference between buying and selling is two different entity, you know.
mm,
Yeah.
okay,
For
okay.
okay, I think for you selling is better because why? It's totally different from your directional trading.
Mm,
Anyway, we can start with theory class. Theory class must go in
mm,
weight because I have not started. The advanced practitioner class is because you got live account with the market really easier to learn. You can start practicing tonight also can.
mm. Do I have to have options to open up new instruments in IB?
Donate. In fact,
No need.
if you look at it carefully, you should be able to see options. You should able to so called to it's actually option tradable already.
Okay,
Interactive broker
okay,
have
okay.
options one. Okay, it's the only thing
Yeah,
that
they have, they have.
the only thing is that maybe I have to get somebody to go and help you guide you through get you through the how to set up the how to use the interactive broker to structure the trades only. That one not a
Mm,
problem. I could get one of my students who got you into interactive broker and teach you how to do it. Or maybe I get somebody to do a video recording and send to you.
mm. But between the IB and what's the other one you were saying? The
TDM
other one you
metric.
use, is it?
Yeah, TDM metric.
So is there any difference between the two?
Technically no. But in terms of
Okay.
user friendly, TDM metric is better. I repeat, TDM
Mm,
metric is more user beginner friendly. Okay?
mm,
Mm. Anyway, not a
okay.
problem. Like I said earlier, if you want to open two accounts, go ahead. But I was told there's a long lead time to open an account with TD Metric. Owing to coronavirus, I got students who go and visit office down there. It seems the office is still closed. They haven't come back from office yet. Because I think they follow the state side rules. That everybody stay at home. Okay.
Mm,
So anyway, you can trade both sides if you really want to.
mm, okay.
Just transfer $10,000 and start practicing already lah. Let's be honest. You don't need even
Mm,
in fact you don't need $30,000 to start trading options at all. Yes, I said lah.
mm, okay.
Any questions?
Nope, that's it.
Okay.
Can.
Drop
Thanks.
Yeah, drop me a
So
message
our
if you're very keen.
mm,
Because I'm now starting a series of new students coming in for option practical class. Okay. Whether the class is 4 months long or 5 months long or 6 months long, no difference by me lah. But officially I tell you
mm,
it's 4 months lah.
okay. And when is it starting?
In fact tonight got class start already.
Oh, okay, okay, okay.
And I said earlier, for your
Mm, mm,
case, is don't need too much. But if based on your family situation, you're not able to come out per se, not a problem now. Okay, okay, because
mm,
you're a trader. Because I don't need to teach you how to click. You understand me now?
mm,
If I need to teach you how to
mm,
click, and I need to worry about your losing experience, then I got problem. But I know the fact you learn from Ray Barrows and you are already trading so say 6 figure accounts. I know for you to lose $10,000 is not a problem. So I don't need to worry
mm,
until you trade until you blank out or brown out or black out.
mm.
Newbies I need to worry about them. Okay, veterans like you I don't worry so much. Okay?
Okay.
Serious you win lose $10,000 been that done that lah. Correct?
Mm,
If a newbie cannot leh. What girl you trade suddenly you lose 500 the thing really can really the thing can black out or brown the thing really can you can freeze, you can see the guy literally freeze down there leh.
mm,
Or can see the face change The face change more patterns than a four-faced Buddha.
Mm.
For you, lose $500 is nothing. Okay? Of
Mm.
course, we don't want to lose money, but end of the day, we have to prepare to lose money. So end of the day, because
Mm.
we and I know as a traders, for us to make money, we must risk money.
Mm. Yeah, lah. I mean, as long as the probability is there and
Yeah,
you string in enough average
yeah.
wins, lah. Right.
Option trading, if you go based on the theoretical basis, it's a law of large numbers. Okay,
Mm.
so the chances for you to lose 30 trades in a row is very much lower than for you to lose 3 trades in a row.
Mm.
And you notice the difference between options. You can shares lose 3 trades in a row is heavy loss. For options, you can lose 10 trades in a row. The losses for 10 trades in a row trade option trading is smaller than a one bet share trade.
Does it normally go beyond, say, 10% of your working capital?
No, it won't, because every trade is $1,000, correct? If your trading budget is $1,000, your strategy is based on the capital of $1,000 or less. How the hell you lose 10%? Unless you use CFDs, then it's a different ball game. Anyway, I don't encourage people use
Mm.
CFDs for beginners.
Mm. Okay.
Okay, any more questions, my friend?
Mm. No, that's it.
Either this way,
So,
you think about it,
mm,
I'll follow up with you tomorrow afternoon, can? Or tomorrow late
mm,
afternoon. Then we can discuss more detail out, let it digest a bit.
tomorrow evening, closer to evening.
5 o'clock. Okay,
Ah,
then
yeah,
better.
yeah, yeah.
Yeah,
Okay. Hey, thanks for your time, Thomas.
no problem. Ask yourself,
Mm,
I'm not a professional trainer. If I'm a professional
mm,
trainer or businessman, I will not spend 2 hours with you trying to explain to you
mm.
to a non-paying customer.
Understand.
Okay, bye. Take care, my friend.
Okay.
Bye.
Hey, thanks, thanks. Okay,
Bye.
bye bye.